Good morning, everybody. How you guys doing today? Everybody feeling all right? D-Rock, I bet you I know what you're going to show us here. Man, I think I have a virus. No, not the one that I thought you were going to show me. Almost odds favorable momentum, but it is a clear path. The momentum is accelerating. Hey, good morning, Freddie. And you take the pull back to resistance. Tiny step. So you took a chance and scored 310. I like very much, D-Rock, that you referenced your risk, um, because it's saying that you recognize that it's not perfect, but that small amount of risk is worth the potential to get to the fib. And you also notice that those trigger lines were accelerating, not decelerating. Nice job, dude. Good looking trade. And then Chef, that's the one. Look at that. Everything says up. No divergence. Odds favorable. You are trading into a termination, though, but you're coming from a good bottom. With all that momentum, no divergence, tiny risk, perfect entry makes it manageable. And fear got you out of this trade. You need to practice patience and trust the process. That's okay. Was it an expensive lesson, Chef? Or, or let's look at it two ways. Um, Chef, you exited at a fib with every trigger below it, right? That's a termination condition. Would you agree? Yes. So, Chef, is exiting at a termination condition a bad idea? Not so much. So, and this is how I want you to think about it. You made, what did you make? My eyes aren't that good. Hold on. 32-inch screen monitor, and I can't. 59.25 to 69.25. So you made a total of 4 points. Not your best work, right? But you did all right. You made money. You took the perfect entry. And Chef, you traded into a termination condition, not a 50-50. And I think that's one of the things that I want you to see here. When you took this trade, none of your trigger lines were through that area. Not yet. Does that make sense? But you took a very calculated risk because of all the advantages. Your entry is so freaking good that there's virtually no risk. And that goes back to what D-Rock just said, right? Virtually no risk, therefore we're good. So, Chef, this is where you split your ATM a little bit. You put one contract at the trouble spot, right? Let the other one run. But if that red line almost gets you out, these fluctuations are going to terrify you. So better to go ahead and take it and annotate it. Your management will grow as you get more comfortable, right? You'll learn to trust the large chart. I think it's a great trade, and I don't think I would be mad about the management. I think there's a lot of opportunity there, but it's certainly not a failure. It's recognizing the trouble. That's what sparked your fear. Your recognition of a termination condition sparked your fear. Not it may have been you don't want to lose anything because you're in and it's going great, but the reality is fibs across the board, not a bad exit. So nice job, dude. Good morning, Miss Debbie. I figured we'd talk a little bit about the trades before we got going, but guys, let's get into the day. Let's do what we do. Good morning, everybody. Nice to see you all here. Good morning, Sophia and D-Rock and Chef and Freddie and Dwight and Jim and all you cool kids. Um, my name's Mark. I'm going to be talking about the same thing I talked about yesterday, and this will be a great prelude to what I'm going to talk about tomorrow, guys. We're going to talk about advantages a lot. We're going to talk about just really focusing on advantages and becoming chart readers, and getting some routines in place that are going to bring you success. And the first routine, always, every day, is going to forexfactory.com. And it was interesting because this morning, 8:15 is not a normal news time. Hey, good morning, Ace J. But Wednesday, October 4th at 8:15 a.m., there was the non-farm employment change. And if you were watching the market, man, it spiked. It ran fast. Hey, good morning, Charles O. Nice to see you back in here today. Um, but because I knew that that news was coming, because I knew that it can create a reaction, I chose not to trade, which is good because it spiked down really fast and then it launched up. And any position you were in would have been stopped out one way or the other. So we don't trade. I'm not sitting on the edge of my seat wondering what the employment change is going to be. I just know that it's going to create a reaction. And it was funny because I check news every day. This is the first thing I do when I load my charts. But we get ourselves into this routine. Well, news is 8:30. News is 8:30. And I think that's what my brother did this morning. So about 8:10, I was like, "Hey, don't forget news in 5." He's like, "Man, I forgot to check." So it's great to check your news while your charts load. It helps out, just keeps you out of the way of some crazy. And then everything that I talk about, guys, is going to come from the tutorial section right here. And I like to say this every day because I want you guys to know where to find answers if I'm not here. I want you to know where to go to see what you need. And the trade that I talk about for the first hour every day. Good morning, Snorri. Every day, the first hour, guys, is dedicated to a high probability trend trade. And I drop a lot of stuff in the room. You're not obligated to take it, but feel free to. Take some notes if you want. But a high probability trend trade is defined when each indicator on every chart agrees with the rules for the trade. And guys, this is your best of the best. This is when all the triggers are their strongest. This is when there's nothing in between you and your targets. I mean, there's nothing, no termination conditions. It's really just kind of smooth sailing to get you to where you want to be with a truckload of advantages behind it. We focus on the high probability trend trade in the beginning because it's pretty simple. It's only three rules, guys. Your high probability trend trade is literally three rules that create three advantages. And these three advantages are going to carry you through the rest of your trading because they don't only apply to the high probability trend trade, they just happen to be the recipe for a high probability trend trade. These three rules create three advantages outlined here in yellow. Momentum, a clear path, and an entry area. And guys, when you have this, you're in the highest probability situation that you can have. This is when everything agrees for the trade to continue in the direction of the trend, and that's the recipe for the trade. And this is our first hour. This is us hanging out. We're going to talk about the rules. We're going to talk about the advantages. We're going to make sure that you understand them. Um, and these three rules happen on only two charts. Again, simplicity, guys. Not complicating things. Your large chart is going to lead the way. And I really do like that phrase. The large chart leads the way. The large chart tells you when it's time to look for an entry because your large chart, one bar, the most current bar on the large chart, will define direction of the market, it'll define the momentum in the market, and it'll also define any areas that you may need to be worried about in the moment. All of this comes from this one single bar. And it's a broad stroke of a brush. It is a general consensus of what the market thinks should be happening, or more accurately, what the large crowd thinks should be happening, the people in control. It's groupthink, right? Everybody says the market should be going up, and the market goes up because they keep buying. Everybody says that the market should have an awful lot of momentum, and it does because everybody keeps buying. And then, hey, good morning, PFI. And then your large crowd also is going to react to these key Fibonacci areas. They're either going to sell or buy or take profits or stop people out. But there's fights that happen at these areas. So your large chart's going to define all of that. And your first two rules happen on the large chart. Your first two advantages as you look for a trade are going to happen on that large chart. And rule number one is designed to give you the advantage of momentum, to give you the advantage of a market that's likely to continue in the direction of the trend. Rule number two is going to establish a clear path, meaning that you're not trading into any of these Fibonacci indicators, that you're not putting yourself in a position to get caught in a fight by the people that move the markets. And when those two advantages are present, when those two rules are true, you'll be able to turn your attention to the smaller chart. And guys, this is a refinement chart. This takes that broad stroke of a brush and it cuts it back into more manageable bites. And that's where the small crowd comes in. If the large crowd says we're going up and we have momentum and there's nothing in the way, the small crowd, hopped up on coffee and teenage angst or whatever, they fight it. They say, no, large crowd, we want it to go back. And that small crowd forces a pullback on your smaller, faster chart. And this is where Nexgen users enter trades, is on that smaller, faster chart from that little fight that the small crowd presents. And you're literally taking the one bar on the large chart and it's being refined into 15 to 30 bars where you will pinpoint the area where the market is most likely to continue, and you'll literally wait for it with a limit order to enter the market for the highest probability trend trade. So three rules, guys, on only two charts. And the most important thing is what this is doing for you. One, it's teaching you patience because this is a trade that doesn't happen every moment throughout the day. You have to wait for it to set up. But this high probability trend trade teaches you to read your charts. It turns you into a chart reader. It helps you understand how to read your indicators. And chart reading is honestly 90% of what you do during the day. Sitting on your hands, waiting for advantages, sitting on your hands, waiting for the advantage of momentum, doing absolutely nothing until that clear path is present, and just rolling back from the mouse when you don't have your entry area. So you're going to become a chart reader through these three advantages, through learning this high probability trend trade. And then the amazing thing is you're going to be able to fluently look at your workspace, your large chart, your small chart, and you're going to understand where the market is likely to continue. And that continuation point will be your entry for the highest probability trend trade. You'll understand where the market is likely to go eventually, and this is going to help you make great decisions on management, to exit at appropriate spots or to hold longer when your momentum and your path is clear. And then you're going to understand where the market is likely to stop. And I can't stress the importance of this. Where the market is likely to stop is a termination condition. And a termination condition may reverse the market. Termination conditions are where the people that move the market, the people that create the momentum, the direction, this is where they're making decisions. They're making decisions about their positions or they're looking to enter positions. But what you'll find is when we get to these termination conditions, these areas where the market is likely to stop, three things can happen. It can stop the market dead in its tracks and reverse it. It can just break. Areas break all the time with momentum, or it can create this unmanageable fight right by the area where the buyers and sellers start jockeying for position and where the small traders tend to get run over multiple times, trying to be first or trying to hold longer than they should. So these termination conditions become a very integral part of what we do each and every day. And mostly because when you do have a termination condition that reverses the market and that high probability trend trade sets up after it, guys, this is your first 30 days and beyond. Recognizing the entry for the high probability trend trade that happens after a termination condition in the market, this becomes a trade that typically wins 70 to 80% of the time. It's a trade that creates an awful lot of confidence through the memory of success. And it's what we're going to talk about for the first hour here today. We're going to talk about these three rules. We're going to see them visually. We're going to go back and we're going to talk about how to study them. And most importantly, we're going to start the path of developing trust in the methodology, seeing that it does in fact work, and that when you take a little time and a little effort, it's going to work for you as well. So we're going to go through, this is your Next-Gen Software Services step-by-step path to becoming a confident trader. We're going to learn those trigger line and Fibonacci rules for when it's okay to trade. Three rules, two charts. We're going to see it visually and the words associated. I need you guys to simulate. Get on there on your simulator, right? Practice, make mistakes, knock things around, break everything that you can. There's nothing you can break that I can't fix, right? If you make a mistake, you and I will have a conversation and we'll find a path to fix it. Post all of your pictures in class, guys, not just your winners. I'm proud of you when you win. I really am. Atta boy, atta girl. But it's your losers that are costing your money. It's your losers. It's your mistakes that are keeping you from your goals. So don't hide your losers from me. Show me each and every loser because there may be a simple fix that eliminates that from your plan and gets you where you want to be. We don't want you practicing the wrong trades. We don't want you jumping in too soon, too late, fighting trends. Because the reality is, when you win and you get lucky, it creates short-term success, but there's a long-term failure associated. And when you talk to the experts on, or you read books about emotionless trading, it says that one of the most detrimental things that can happen to a day trader is to win without the rules met because it creates this false sense of security. So we're going to try and practice the correct trades every day. And it's okay if you don't have them in the beginning. We'll talk about it. And then simplify. Simplify, 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 guys. Keep it as easy as you're able to keep it. 3 rules, 2 charts. And what looks are you going to commit to, guys? That's going to be the look that you're going to study, that you're going to burn into your brain, that you're going to be able to catch without hesitation because of the statistical advantages. And I'm going to teach you how to do that. It's going to start with you posting your trades in class. Every time you take a trade, or really every time you look at your charts and you have a question, I just want you to go through and I want you to annotate your charts because this is how we have a conversation. Um, Always show your large and small chart. It's a 2 chart process. I need to see both charts. We want to see that the advantages were present on the large chart, and we also want to see that your entry was correct on the small chart. I want you to write your rules on the chart. And I want you to, this is the part that gets people. I want you to not only write the rules that you're following or that you're trying to follow, but I want you to draw an arrow from the rule that you've written to it actually happening on the chart. And what this does is it solidifies the look, right? It solidifies the rule. It increases consistency and it gives you an absolute visual of what it means to have your rules met. And if you do this and there's a mistake, which is okay, you're going to make it, it opens the door for you and I to have a conversation, to go back to the resource material, to identify. A lot of times I get people saying that I had a clear path. And then when we go back and we talk about the rules for termination conditions, they realize that the path wasn't as clear as they thought it was, and it may have had something to do with their losers. Um, Show your timestamps and your price because I'm going to line up what's happening on the large chart with your entry on the small chart. And then one of the most important things that you can do if you're showing me a simulated trade, or if you're showing me a real trade, is show me where you got in. Show me exactly where you got in. Sometimes you can use a circle if you want to draw on your charts, but honestly, you can right click on your chart and go to your data series setting, and it'll, if you scroll all the way to the bottom, you'll be able to plot the executions where it shows me not only the text but also where you got in. And what this does for me is it helps me help you refine the entry process, getting you into the absolute best spot with the absolute least amount of risk and the absolute highest profit potential. So this is how to annotate a chart. I would be as thankful as anyone could possibly be if you try to stick to this recipe every time you show me a picture. And then the second half is use your spreadsheet, guys. Nexgen gave you a spreadsheet. It's in your Nexgen study picks folder. Um, they're in a constant state of running, Dwight. That's kind of like taking a big bite of fried chicken and then licking the grease off your fingers before your mouth is empty. How's that for an analogy? You want them closed because you want them to load up with the fresh data, right? And if they've already got data running, it's not going to work out. Great question, though. Because I asked the exact same question when I started doing this, and my brother was like, "Really?" And I was like, he wasn't as nice to me as I was to you, but the fried chicken analogy gets me every time. Um, Guys, use your real-time spreadsheet. So NextGen gave you this. When you download it, it's in your NextGen Study Picks folder, and it's blank. It's a clean slate. Your first page is where you're going to track everything that you do. Every time you take a trade, this is your trade journal. This is you having something to go back to look at, to test. I got you, Ron. And the first page, the trade journal, is designed to become a study tool. Um, every trade that I take today, I'm going to study tomorrow morning. And every trade that I took yesterday, I studied this morning. I'm checking the previous day's trades and I'm asking myself these questions. What worked and what didn't work, right? What was the feedback that I got from my trades? What felt easy? You're going to find a correlation between the easy trades and the rules followed trades. And what made you nervous? What felt forced? And this is when you start jumping in too soon, right? Or this is where you start knowingly breaking rules, hoping that you can get that winner. But this brief historical study each morning, it's going to prepare you for the day. It's going to accelerate the learning. And you're going to recognize patterns in the market that are bringing you success. You're going to recognize patterns in the market that are robbing you of that success. But the most important thing through the pictures and through the spreadsheet is you're going to recognize patterns in yourself. We all have a thing, right? Whether it is trading in determination conditions, that was my thing. Is I had zero respect for these areas, and it took a lot of money out of my account. Some people jump in too soon because they have a fear of missing out. Some people jump out too late or jump in too late because they feel like with confirmation they have a better chance, but really all they're doing is creating a larger loser if it doesn't go. So this little study is going to help you each and every day. And that's the second half, guys. Use that spreadsheet. And then since you're going to learn the Fibonacci and trigger looks to make them easy, your second page are your pictures. These are the pictures that fit your rules. When you post a trade in class and we have this conversation about it. So let's say hypothetically you posted this picture in the room and you said, "Hey Mark, this is my odds favorable momentum and this is my clear path and there's my entry at support right inside of favorable large triggers." I'm going to say, "Holy smokes, Freddie. Charles, oh, this is everything that we look for. This is the highest probability trend trade. This is the best of the best and the one that typically wins 70 to 80% of the time." Guys, this happened on crude oil this morning. I was hoping somebody would show me the picture. I'm going to take this picture and I'm going to drop it into my favorite sections look and I'm going to put it in here and I'm going to say something clever like, "Never miss this trade," right? Because this is my best of the best look. And then I've also got for you client, all the Nexgen users that post trades in the room that fit the rules. I spent about a year stealing them from you. Every time you would post a high probability trend trade or a medium probability trend trade, every time you were embracing advantages, I would liberate it and I would put it into my spreadsheet. So this spreadsheet also has about 250 pictures of next-gen users using the software, finding amazing trades that revolve around advantages. As you scroll over to the right, my NASDAQ traders, I put some stuff in there from my own study. A lot about management things, getting into and managing these perfect entries, patterns that happen all the time in the market, and then a lot on termination conditions. So right now, I'm going to drop my spreadsheet into the room for you guys. Feel free to steal it so that you have all of this information that I have on my spreadsheet. But that's the second half. Make sure that you're using that spreadsheet. Allow it to be easy. Keep it focused on two charts. Simplify, post, post, post. And let's get to work, right? I don't know, PFI. Do you know what I do know? Red means go get a bagel. Red means refill my coffee. Red means go scratch the dog behind the ear. Tell your wife she's pretty, right? Because it may create a crazy response in the market. Um, and I'll show you why. I'm going to go to NASDAQ real quick. It's at 10 a.m. Awesome. So at 8:15, we had news. Guys, I want you to see my timestamps for 8:15. 8:15 started right here. 8:15 ended up here. This entire spike happened in less than a minute. This is why when we see red envelopes, you have the opportunity to avoid that mess, guys. So let's get to work. Let's talk about rule number one real quick. I'm going to tell you right now, PFI, you're going to be tempted to try to trade news. We all have been. We're all like, man, I wonder if I can catch that move. Do it on simulator. That's not trading advice. That's just wear your helmet, kid. We've all done it. I've done it. FOMC is when I do it the most. I'm like, man, I'm going to see if I can catch that 8,000 point ruse. It is, George. I'm trying to catch a falling knife. I love that analogy. It's a business report, but guys, here's the beauty of it. Um, is you don't have to know anything about ISM services. You don't have to know anything about farm employment, unemployment, hourly earnings. You don't have to know anything. All you have to know is that that red box may create a reaction in the market that's not tradable. Yeah, and Snorri, you're right. You shouldn't do it, but a lot of people feel such a desire to try. You shouldn't do it. Here comes Ron C. Ron loves to trade news, but Ron won't do it on anything but simulator. It's like a video game to him. But Ron also has a very solid plan, so he's not creating bad habits. He's just having a little bit of fun. Rule number one says on the large chart, I must have strong trigger lines. And on the large chart, to have strong trigger lines, the only way that it's possible is to be trading with the trend. But once I have strong trigger lines, I have the advantage of momentum. The first third of the equation is taken care of. So let's start with trend, right? If the background on the large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. There's a lot of people that love to be first. There's a lot of people that see a blue line and decide that it's time to trade. This simple, never fighting the trend is going to eliminate about half the mistakes that you can make. It really is. Because the only way that you can have strong triggers is to be trading with the trend. Because strong trigger lines means that your small triggers have broken above the large triggers, which paints the background green, which gives you an uptrend. And then when you get separation between the small and the large, the odds are favorable for the market to continue in the direction of the trend. And that's the easiest way to say it. Strong triggers give you odds favorable momentum. Odds favorable momentum is rule number one for a high probability trend trade. Odds favorable momentum goes from the point of separation until they return. And this is where Nexgen users are going to look for their potential entries. This is where that small chart hopefully forces a pullback. And this is the most favorable look for buying Fibonacci support on a smaller, faster chart where the small crowd forces that little pullback. On your large chart, those pullbacks look like tails or wicks. It never even makes a full bar down. You will be able to pinpoint your entry for the high probability trend trade right where that bar is most likely to form. Gene, the answer is no. And we'll talk about that when we talk about termination conditions. You're welcome. But that's just a definition, Gene. That's it. It doesn't mean that the market won't continue down. And it's a good indication that it may, but it's not a strong top. And we'll talk about that when we get to terms. So odds favorable momentum to the upside is the separation, like scissors open, ready to cut. Odds favorable momentum to the downside. Separation between the small and the large. That space in between, right? Both triggers are wide. They're angled in the direction of the trend. Flat, lifeless triggers means that there's no momentum. Flat, lifeless triggers, there is no advantage of momentum. So Nexgen users, your first rule says that you want separation between the small and the large because it gives you the advantage of momentum. If these are strong trigger lines, well, the other side of the coin is weak trigger lines. When those small trigger lines work their way back inside of the large trigger lines, this is a weakening of the large triggers. And when you have weak triggers, anything can happen up or down. It becomes a crapshoot, right? If the scissors are open, ready to cut with strong triggers, The scissors have closed and they can't do anything but take a stab at it. So, guys, this is your first rule, odds favorable momentum. It really becomes pretty easy to recognize. And if we go back to the live market, let's see if we have any examples. Here I have small triggers inside of the large triggers. I don't have odds favorable momentum. Here I have small triggers above the large triggers, but they're red. Once again, not odds favorable momentum, because odds favorable means that the smalls are below the large, not above. And then crude oil, thank you PFI. Small trigger lines below the large trigger lines. The large trigger lines are wide, they're angled in the direction of the trend. This most current bar lets me know that I'm in a downtrend, and it lets me know that I have odds favorable momentum. And when we get to termination conditions, it's also letting me know that I have a clear path. We'll talk about that in a second. But first, let me remind you guys that odds favorable momentum will not happen every second of every day. We just looked at 3 markets and only one had it. You may get odds favorable until they weaken, and when they weaken, notice how it precedes a reversal. The market goes from down to up. Provides you the odds favorable, there's one of those tails, one of those potential entries. Works its way all the way back up to weak triggers again, and there's another reversal. Guys, this is pretty common, especially when it happens near fibs. This reversal gives you odds favorable. There's one of those tails. Actually, there's a couple of them. And then we get into the most dangerous part for people that aren't following the rules, guys, and this is that moment of indecision. It's when the small triggers and the large triggers don't agree with one another or with the trend, right? Because there's those small triggers above the large triggers, but they're both red and going down like we just saw in the S&P. This is where the people that move the market, this is where buyers and sellers are fighting it out. This is where it's a schoolyard scrap for supremacy. There's no reason for Nexgen users to ever get caught in there. This is a transition look, but this is where you will be tempted to predict whether the market's going to go up or down. You may take long trades against red triggers because the background is green, or you may take short trades against strong small triggers coming up because the background is red. Um, Resisting the temptation to predict, focusing on the advantage of odds favorable momentum will keep you out of this fight. And I actually took a picture this morning. It was NASDAQ. NASDAQ had a huge fight that you can see on the small chart when things just weren't clear on the large chart. And when you stay out of these, it's going to help preserve equity because eventually somebody's going to win and they're going to provide you that odds favorable momentum again. So give me a Y in the room. Freddie, Charles O, are you pretty good on that one? Odds favorable momentum sets the tone. That separation between the two gives you the advantage of momentum. That should be the precursor for every trade because look at that. All that momentum took you straight to Fibonacci support. I love it when that happens. Once I have odds favorable momentum, well, now I need to make sure that I have a clear path. I have to make sure that there's nothing between me and my target, none of those areas where people may react. And you will, Freddie. You're going to get there. This is only day 2. What are the areas where those deep pockets fellas react, those deep pockets ladies react? Guys, it's divergence highs and divergence lows. These magenta and cyan lines that come off of a pivot. All divergence means is that there is a loss of momentum. It means that price came down and went back up and the momentum didn't follow. So the sellers are in control and they're pushing down. The buyers pushed back and robbed them of momentum. That's it. The buyers were in control. The sellers pushed back and robbed them of their momentum. Guys, you'll see that visually through a cyan line from a low or a magenta line from a high. And it prints about on the 3rd bar. So price never gets to this line. Price actually creates this line. You're also going to look for red Fibonacci resistance. You're going to look for blue Fibonacci support, these yellow 1-to-1 dots, and sometimes you're going to see a mid-band if those large triggers remain a full bar away. So these are the areas, well, first it's just recognition when you're looking at your workspaces, but these are the areas that may stop the market. These are the areas that may create a bounce. These are the areas that may create a full reversal. And it's really a pretty simple process of recognizing it. I'm going to change it up a little bit. We're going to go to this picture first. Um, Two things have to happen to identify a termination condition. And the first thing, hey, good morning, Sydney. The first thing is price reaches an area, meaning that these dynamic Renko bars, these are just reflections of price. As price fluctuates up and down, these bars are formed. Well, when price reaches Fibonacci resistance, in this case, all you have to do is ask yourself, where are my trigger lines? If you reach resistance and all of your trigger lines, both small and large, remain below the area, you've reached an area that may stop the market. You've reached what we call a termination condition. Um, the area is not broken. There is no clear path. Rule number 2 is not met. And that means that if you're a rules-based trader, there's absolutely nothing for you to do in the moment. You have to wait and see how that area is going to react. It's either going to break or it's going to reverse. The area is broken when the small triggers and the large triggers get to the other side of the fib, of the yellow 1-to-1, of the divergence line. Now the area is broken and now the path is clear. And it really is this simple in the beginning, guys. If you reach an area and your triggers don't break it, just sit on your hands. This is the recipe for keeping you out of an awful lot of losing trades. You're going to see them at highs, you're going to see them at lows, but the recipe never changes. The first thing that happens is price must reach an area. And these are termination conditions at a high. I'm giving you just a little study material for your folders. In the first slide, the sellers steal the momentum from the buyers and create this divergence line. Because price doesn't reach the line, it's not a termination. It's just a weakness in the market. But when price returns and reaches that divergence high, all of my triggers remain below. Now it's a termination condition. Price reaches resistance. All the trigger lines remain below. Now it's a termination condition. No more long trades into the area. Same thing when price reaches resistance, yellow 1-to-1s. All my trigger lines remain below. No more long trades into the area. Guys, if you let it be that simple, it's going to keep you out of an awful lot of trouble. When we get to lows, the recipe doesn't change. Everything begins with price reaching the area. Those dynamic Renko bars reach the yellow 1-to-1s. All of the trigger lines remain above. Look at the spikes going up and down at the termination condition. There's a fight. Termination conditions for the win, right? Price reaches support, all the triggers remain above, no more short trades. Next-gen users stay safe. They don't trade into these areas that may reverse the market. And then there's one of those pivots where the buyers stole the momentum from the sellers. It creates this line. And then when price reaches the line, now it becomes a termination condition. So that is your most simple recipe, guys. Price reaches an area. If the trigger lines don't break, that area is a termination condition. Look at what happens after that termination condition in the market. That's quite the reaction, isn't it? Hopefully nobody went long into that area. Price reaches Fibonacci resistance. I have to wait to see, is it going to break or is it going to hold? Look at the reaction on the smaller, faster chart right at the fib. That's that fight happening. And it happens every day. All right, David, great question. Here's my line, right? 74. Small triggers, they straddled it. Look at the large triggers, flat and lifeless. They never broke the area. Let me show you what it looks like for smalls to break the area. Boom, boom, boom. Let's find an example of it real quick. Areas have been holding this morning. Absolutely. All lines need it to break. But I want to show you. Actually, you know what? I just have a picture. We'll go to the picture. Um, whoops, wrong one. So sometimes, David, you're going to get an area with the potential to break. Price reaches, no triggers. No clear path. Both small and large break. The path is clear. David, you're going to see this a lot. This is an area with the potential to break because of the momentum. We call this a 50-50 look. 50% of my triggers have gone above the line, 50% remain below. What this means is that with the odds favorable momentum, this area has the potential to break. But it's not broken yet. Does that make sense, David? It has the potential with the momentum, but until small and large get to the other side, it's not broken. This throws you into what's called a medium probability trade because it's not a clear path. And you'll see this a lot where the small triggers kind of break through the area, threatening to break it, and ultimately the area holds. All that momentum creates a little overrun and then a reversal. You'll see both lines of the small trigger, that's when they're considered above. Just one line of the small triggers doesn't count. Both lines of both triggers have to get through the area. Does that help a little bit, seeing it like that, maybe in stages? So you'll see where price reaches support, none of the triggers break through. I'm going to see if we can find one more spot where the smalls look like they're beginning to break through, but they haven't fully made it. And guys, this is a market on an absolute runaway. So it's not the best termination condition lesson. On the S&P, though, let's see what the S&P is doing. There's those smalls breaking through, but the large haven't. Look at that. And there's one of those, has the potential to break, but it didn't. Has the potential to break, but it didn't. And there's another one of those looks, David, where the smalls don't even make it through. So great question. Great looks there. So let's go to the resource material, and we'll talk about terminations a little bit, guys. Um, and just some great pictures. You're done for the day? Fantastic, Manpreet. I hope it's because you won and not because you had challenges. Price reaches Fibonacci support. No trigger lines break through. No trades, guys. Sit on your hands. Wait. Look at the size of that bar that comes off of support. You can't trade that. Rule number 2 keeps you safe. Here's one of those divergence lows. The buyers stole momentum from the sellers, but this isn't a termination condition. This is just a loss of momentum. When price reaches the divergence low, trigger lines remain above. Now I have a termination condition, guys. This is what we call a pivot stop out of a prior divergence line. No more short trades. If this termination creates a full reversal in the market, we're going to call it a strong bottom. So, Gene, going back to your picture earlier, when a termination condition creates a full reversal, we're going to call it a strong bottom. And then go in the other direction. These pivot stop outs are very powerful, even more so when they happen with Fibonacci. So I'm going to take a picture, guys, and this is your visual reminder that 90% of your day is spent sitting on your hands waiting for advantages. The buyers are in control. They push the market all the way up to Fibonacci resistance. When it gets there, none of the triggers break through. Nexgen users know not to go long, not to trade with the trend, not to hope that the area breaks. They sit on their hands and they wait for the reaction. The reaction was a push all the way back down to Fibonacci support. And absolutely none of the trigger lines broke. Once again, can't go long, can't go short. Guys, 90% of your day, if you're doing it, great. If you're waiting for statistical advantages, 90% of your day is waiting for the advantages to be present. From support, the market pushes all the way back up to resistance. No triggers through, that's a termination. It reaches the divergence high line. No triggers through. That's a termination. Ace J, awesome. Do you have 3 minutes? I'll look at them real quick. Or you can watch the replay I will go through, whichever works best for you. And then price reaches that second line of resistance, termination condition. 3 termination conditions in the same spot. It's a pivot stop out and it's fibs. Guys, this termination creates a full reversal. It's a strong top. This strong top gives me odds favorable momentum. That's my first advantage met. Odds favorable has a clear path. There's my second advantage. Guys, this is your 10%. waiting for the market to give you the advantages. This little pullback on the smaller, faster chart becomes your highest probability trend trade. None of the lines cross exactly. It's a termination condition, David. No problem, Ace. Price reaches resistance. David, every one of your trigger lines is below resistance, yes? Price reaches support. Every one of your trigger lines is above support. Remember that the recipe starts with price reaches the area. It's so important to remember that. Price reaches when none of the triggers break, it's a termination condition. Price reaches when none of the triggers break, it's a termination condition. No. Lines cross to break the area, David. Price reaches the area, none of the triggers break, it's a termination. So let's go back to the picture real quick. It's when small and large get to the other side of the line, David. That's when it's broken. That's when the path is clear. But if it reaches it and none of the triggers get through it, it's a termination condition. So you took both sides of the lesson and they got a little mishmashed there. Does that make sense? Price reaches, no triggers, no trade. Price reaches, no triggers, no trade. Price reaches, no triggers, no trade. How easy is that? And it's kind of flows too, right? We are. This is a large chart, Ollie. Large chart is where we're looking for these lines, right? Large chart is where we're letting price reach. Large chart is where we're gauging the relationship of the trigger lines to the area that was reached. If they stay below resistance after price reaches it, this is a termination condition. If they stay above support, it's a termination condition. Pretty cool, right? And then when this termination creates a full reversal, gives you odds favorable and a clear path, that's the 10%, guys. That's the other side of trading. When your chart reading gives you a statistical advantage, you're going to be able to recognize what's going on. And Paul, this is where you get faked out going long. Paul, do you have odds favorable momentum? Let's just start with that one. Rule number one's not met, right, Paul? Rule number one was met down here. Rule number one was not met here. Do you see the difference between the two? Odds favorable, anything can happen. Market is screaming, market is slowing. And then what happened on your smaller chart? Maybe this next termination condition that we talked about happened, and we'll look at it real quick. I want to show one more termination condition. And then Paul, oh, thank you for saying that. I have a great lesson for you. Let's do one more termination condition, and then I'm going to share a picture with you guys that, Paul, it's going to help you so much with that. So let's go through the recipe. David, Ollie, on the large chart, price is pushing down, even with odds favorable momentum, and it reaches yellow one-to-ones. When price reaches, those dynamic Renko bars reach the yellow one-to-ones, none of my trigger lines are capable of breaking through. This is my indicator that I'm not taking any more short trades. David, does that make sense? Ollie, does that make sense? Freddie, does that make sense? Charles O. Awesome. And guys, I'm going to tell you, this is why we keep it simple. Could you imagine thinking about 50 different things? Let's keep it focused on price reaches, no triggers. And I like this picture a lot, guys, and I think that this picture is very important for the lesson. Because it goes back into that 90%. We know that sellers may be taking profits here and buyers may be entering positions. And look how the buyers take over and they push the market up. You can still recognize that none of my trigger lines are above this area of resistance, but the sellers aren't done and they fight back. And the buyers, they're like, but I've got more to do, and the sellers aren't having it, and the buyers fight again, and the sellers aren't having it. There's no reason to ever get caught up in this fight, guys. There's zero reason for Nexgen users to ever get beat up, hoping to be the first one in, hoping for a trade. Because ultimately, and here we go, the buyers rob the sellers' momentum. And notice how both small and large triggers get above resistance, breaking the area, providing a clear path. The small triggers are outside of the large triggers, letting me know that there's some momentum there. And there's one of those little pullbacks on the smaller, faster chart. And guys, that becomes your highest probability trend trade. So once again, this is your 90% chart reading, waiting for advantages, waiting for the market to tell you it's okay. And this is your 10% with the advantages in places, taking that best of the best trade, taking that trade that typically wins 70 to 80% of the time, giving yourself a statistical advantage. And this is how we make money as next-gen users. Don't get caught in the fight. Rule number 2 is designed to keep you out of that fight. Sometimes the market turns from nowhere, right? So, Paul, this is one of the ones that you were talking about. Everything says up, the path is clear, you're anticipating the market to go down, and it goes back up. Everything is clear, the market's railing to the top side, and then the market goes down, and you're saying to yourself, but I thought it was going down. So this final termination condition you will recognize on a smaller, faster chart. So Ollie, this is your smaller, faster chart, the only termination condition that I respect on a smaller, faster chart. And it's 3 divergences, 3 of those losses of momentum on a smaller, faster chart may terminate the trend. 3 cyan lines from a low, 3 magenta lines from a high. It may terminate the trend. It may create a push in the other direction that's detrimental. Because 3 times the buyers have stolen momentum from the sellers in the same price range. This is very powerful. It becomes more powerful when those small triggers work their way inside of the large, creating that anything can happen look. And then more powerful still when that third pivot from a low is higher than the previous, creating a head and shoulders, or lower than the previous from a high, creating that head and shoulders. And what you're going to see is this look at a low or this look at a high is going to happen when that large chart appears to be changing direction out of nowhere. So let's take a look. That was crude oil, right? Paul, was it not? Maybe it was. Okay. So let's go back to, it was 9-ish. Mine looks different than yours. Was that yesterday? Is this today? Maybe it's just a different look. Right around 9 a.m. So right about here, I've got my 21 fib on there too. So there's 2 divergences in weak triggers. And then if you just didn't believe it, there's a third, and they try one more time to push up. Whoops. But these multiple divergences in the same location start to give you that indication that even with these weak triggers, even with that clear path, this market's not likely to continue up. Does that make sense? And then when we talk about entries, Paul, you'll notice that this is the only entry that potentially fits the rules. With that weak trigger look, this is the only pullback to support inside of favorable large triggers. Um, so it kind of goes back to, and we're about to talk about those entries. It goes back to these 3 advantages are designed to keep new users safe. These 3 advantages are designed to keep you in a position where there's always a statistical advantage. And Paul, on that one, you waived your right to momentum. If you took the trade, I don't even know if you took the trade, right? You waived the right to momentum, so you knew that the market wasn't likely to continue in the direction of the trade. That simple lesson comes back, and you could say without hesitation that anything could happen up or down here. And then when you take that anything can happen up or down and you couple it with even more losses of momentum, we're going to get there, I promise. I need to talk about the entries before I talk about that fib being close, because then it's all going to come together for you, Paul, and you're about to have a giant revelation that's going to change your trading. Guaranteed. Guaranteed. Can you guarantee anything in day trading? I don't know. Probably not. So momentum gives us the market that's likely to continue in the direction of the trend. Guys, this is a huge advantage. And I'm going to tell you right now that overwhelming momentum, odds favorable momentum, is going to cover some mistakes that you make. We saw a trade today where a gentleman traded into a termination condition, but because of the momentum and because it was coming from a termination that created a full bottom or a strong bottom, um, that market pushed through with all that momentum. Termination conditions are going to give you the advantage of a clear path. Termination conditions are going to make sure that you're not trying to take a trade. You are that gentleman, chef. Um, they're going to make sure that you're not trying to trade into an area that can stop the market, that can create a reaction, right? They're going to keep you out of that indecision and keep you focused on having a clear path. And once those are present, guys, once the large crowd says, odds favorable, we're going up, nothing's in the way, this is where we rely on the small crowd to get us to our entries. And guys, I'm going to say it as loud as I can. Great entries create manageable trades. Great entries reduce risk. Great entries help you get the most out of trades, have the least amount of risk. And that same gentleman that traded into a fib, chef's like, I'm no gentleman, I'm a chef. But let me show you something. Chef's great entry. None of the triggers had broken that fib. Look at where Chef gets into the market. Virtually no risk. So I want you to embrace the idea that great entries, even when you make a mistake on the rules, create manageable scenarios. And Chef put a clinic on for that one today. So we're going to let the small chart, the small crowd, push against the large crowd. And this is going to get us to our area of entry. Rule number 3 says you're going to use a limit order, meaning that you're literally going to be able to wait for the market to come to you. You're not going to chase the market. You're going to wait for it to come to you, which means that when everything is going up, you're going to buy the market as it's coming down at you. And this is terrifying for new users. Or if everything is going down, you're going to sell the market as it's coming up to you. Guys, your entries are going to be that good. So when the large chart says odds favorable momentum and the large chart has a clear path, this is the look on your small chart. You've made the decision that it's time to find an entry. You've averted your eyes from the broad stroke of the brush, and now we're going to use that refinement tool. Everything says up, the triggers are strong, there's nothing in the way, and your small chart mimics that. It's an uptrend, the triggers are strong. You're going to turn your attention to the areas where trend trades originate, guys. And those areas are Fibonacci support or resistance. It is going to be the mid band, or it's going to be yellow one-to-ones. Fibs, mid bands, yellow one-to-ones. But here's the key, is those areas have to be inside of favorable large triggers. The areas need to be nestled inside of your large and synthetic triggers, which are overlapping one on top of the other, creating the smallest window of opportunity. Guys, the window of opportunity is where the market is likely to bounce. You can identify it by identifying the areas inside of favorable large triggers. There will be trades that you will take as you grow with the software that maybe are not inside of favorable large triggers, that maybe those triggers aren't overlapping one on top of the other. But if you're one of my brand new users, if you're looking for consistency, if you're looking to risk the least amount of money and give yourself the best chance of success, favorable large triggers are what you're looking for. You want to see them one on top of the other, angled wide in the direction of the trend. Everything says up, your triggers are up, they're overlapping, you've identified the area, and now we need the small crowd to do their thing. Now we need that fight against the large crowd. It begins with a reversal bar. When you see a reversal bar on your smaller, faster chart, this is where the magic happens, guys. You're going to create a window of opportunity. Your window of opportunity will extend from the highest point of support, the area closest to triggers, to the lowest point of support, the area furthest from triggers, inside a favorable large triggers. In the belly, like the shark's coming up, like a shark about to breach, right? Those triggers, the areas are in its belly. They're inside, below the highest point, above the lowest point. This creates your window of opportunity. You're going to right click on your chart and you're going to activate a limit order. Right at the top of the window, everything says up. The reversal bar prints. You identify your trigger lines, the areas within. This becomes your window of opportunity. Your limit order goes at the top of the window because of the odds favorable momentum, because of the clear path. For a short trade, it's the same thing. The reversal bar prints. You identify the lowest point of your triggers to the highest point of your triggers, but your window of opportunity is from the lowest point of resistance to the highest point of resistance inside. And guys, look how amazing this is. There's only one line inside of those favorable large triggers. There's only one area of resistance. Look at how small the window of opportunity is, and look exactly where the market reversed. This is your best chance of success, guys. This is the absolute best of the best. Red news in two. Thank you, Ron. So when the reversal bar prints, you're going to create your window of opportunity, guys. And let's go through the process on this picture from start to finish because I want to talk about entries. Great entries are a little scary initially because you have to buy the market on its way down. But I want you to remember a couple things. That your large chart has odds favorable momentum. Your large chart has a clear path, guys. Those first two advantages are in place, and that's what got you looking for the trade on the smaller, faster chart. When you let the reversal bar print rather than jumping in because of your fear of missing out, all you have to do is identify from the highest point of the triggers to the lowest point of the triggers. This is where I'm looking for my areas. This is not my window of opportunity. My window of opportunity extends from the highest point of support to the lowest point of the support. Look at how we've refined and we've created a window where the market is most likely to continue. I'm going to change the color. Your limit order goes at the top of that window, 2 or 3 ticks above. Because remember, the large chart has odds favorable momentum and absolutely nothing in the way. Your large chart says we're going up. This is nothing more than refinement on the small chart. So here's what you have to do, guys. Your limit order goes at the top, and the market comes down, and if it hits the limit order, you're in the trade. You have the advantage of momentum. You have the advantage of a clear path, and you also have the advantage of an area where the market is most likely to continue for entry. This is the recipe for a high probability trend trade. Your first 20 days is designed. It doesn't have to, Alex, but it's certainly helpful. Because if you don't have momentum, what does that mean? It means everything's slowing down, right? And if everything is slowing down, actually that was a great segue, Alex. It might push lower in the window, right? But as long as it stays in the window, Alex, I love strong triggers for an entry. That's just me. I will take trades with weaker triggers if my large chart is screaming with a clear path. Whoops, this way. I'm in the trade. I'm at the top, right? And the market pushes down. And I'm watching ticks go against me. I'm watching negative equity. I'm watching red numbers flash in front of me, guys. And this is where new users, their heart starts palpitating and their palms sweat. And everything is like, oh my gosh, what am I going to do? You're still in the window. Sit tight. Everything's good. The market hasn't changed at all. It still may go to your target from here. But here's one of the best parts about what you can do with this window of opportunity. is you can have a protective stop waiting outside of the window of opportunity. If the market exceeds that lowest point of support, gets outside of those large triggers, 3, 4, 5 ticks, you have a protective stop waiting. You're going to take a loss from time to time, guys. But you're going to manage your risk before you ever manage your reward. And you're going to manage your risk through that great entry, through a protective stop outside of the window. And anything that wins 70 to 80% of the time, mathematically obligated to lose 20 to 30% of the time, guys. This is a cost of doing business. This is you allowing the market to be wrong. That's it. The market forgot that you had all those advantages in place, and it came down and it hit your stop. Small losses are a normal part of a positive equity curve. They happen every day. I've never met anybody that doesn't take losses in the history of doing this class. So this is developing trust for 20 days, developing trust in the methodology, developing recognition so that it becomes easy, focusing on nothing more than your best of the best entries, guys. And this is a trade that you'll learn to never miss because it does, in fact, provide a statistical advantage each and every time you pull the trigger. And this is a trade that typically does this 70 to 80% of the time, goes off to your target. You can reduce your risk further because when it goes in the direction of your trade, excuse me, I'm going to move my stop from outside of the window of opportunity to below that reversal bar, guys. We're managing risk before we ever manage profits. And we manage risk by having the advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And guys, this is your high probability trend trade. And then I want to answer, Paul, your question about the distance. And you know what? I think I have the picture in here. So let's use that crude oil trade from today. Excuse me. Take a sip. So, Paul, and this is great for everybody, right? Let's annotate the chart together. Let's do this for the first annotation down here. I have a termination that created the full reversal. That means that I have a strong bottom, right? Guys, give me a Y if you're comfortable with this term. There's one of those pivot stop outs, which is a termination condition. The termination condition created the full reversal. That's a strong bottom, guys. That's a great look. This is my first annotation on the chart. My second is just looking for rule number one. What's rule number one? Odds favorable momentum, right? Strong trigger lines, the advantage of a market that may continue in the direction. So once again, give me a Y if you see it. Smalls are separated from the large are wide, they're angled in the direction of the trend. Everything says up. And everything says up fast. And then, Paul, this is where we get into the best part about this. The distance between the top of the bar and that fib, you said that seemed like it was getting close, right? And you didn't want to take that risk. So that's only 9 ticks. And Paul, you're telling yourself, I'm not taking a trade with only 9 ticks profit. Why would I do that, right? This is where you have to remember, Paul, that rule number 3 says we buy a pullback to support inside of favorable large triggers. This area of support inside of favorable large triggers is the bottom of this tail. And the bottom of this tail happens at 31, which means I have not 9 ticks of potential profit, 31 to 59, I have 28 ticks. Because I wait for the pullback to support, my profit potential isn't this little gap before I hit the fib. It's this giant gap from the pullback on the smaller, faster chart. So there's 2 ways to look at these areas. And I love this picture. And we do this about once a month. I should probably do it more. But if you have my spreadsheet, there's one that's actually called term or target. And in order for it to be a termination condition, price must reach the area. So in this case, it's a textbook termination condition. And then This was spurred by somebody asking the question. So this fib off in the distance becomes a target. Termination if price reaches it, target if price does not. Does that make sense, Paul? Awesome. That was a great question. And David, your question is amazing as well. So let's talk about it. You know I have a picture for it, right? Strong trigger lines, no terminations. Rules 1 and 2 are met, guys. So, David, circling the tail is a historical study. Circling the tail allows you to go back and see how many opportunities there were in the market, how many times they fit the rules. Circling the tail isn't to be done in the moment. Circling the tail happens after the fact. Don't wait for the tail to form to take a trade. It's long gone by then, right? How do we know where the tail is most likely to form, David? With our entry chart. What we have here is odds favorable and a clear path. So let's go through it. Let's use that crude trade as an example. Gosh, I've got a lot of stuff open. Let's go through the crude trade. Are you ready? David, I hope this helps. So let's go through the whole process, guys. Let's go through the chart reading because, David, this is what it's going to look like in the moment. Termination creates the full reversal. I know that I'm looking for long trades. I have odds favorable momentum, and the top of my bar has not reached an area. Let me pull it down a little bit. The top of my bar has not reached an area. Are you good so far, David? So how do we know where to enter? At this point, watch this. I don't need it. At this point, all of my attention is focused on this smaller, faster chart. And I'm identifying, well, there's favorable large triggers, right? And with these favorable large triggers, I do have odds favorable momentum. I love that look. And I'm looking, I've got 1-to-1s up here, but they're kind of far from the triggers. I've got a mid band. And I also have support down here. So all I've done so far, Dave, is I've identified the potential areas where the market is likely to continue. Those areas that may create a bounce, that need to be inside of favorable large triggers. And the small chart is railing to the top side, and I'm starting to get nervous. Is it going to go without me? Oh my gosh, it keeps going up, and I'm not getting paid, and this is the worst day ever, and I'm so fearful. David, do you remember what we're waiting for on the smaller, faster chart? When the rules are met on the larger chart. So on my smaller, faster chart, I need the signal for that pullback, and that's a reversal bar, David. That is, after all of these up bars, I want to see this bar on my smaller, faster chart. I want to see that reversal bar. Because what this reversal bar is telling me, whoops, this reversal bar is telling me, let me get to the picture that talks about who's in control. This reversal bar is telling me that the small crowd is beginning to force a pullback, that when everything says up and the path is clear on my large chart, there's a group of yahoos trying to fight the trend. And they're like, I don't care about momentum. I'm going to go short. I don't care about a clear path. I'm going to go short. And David, we're so thankful for these guys. Because the second you see this reversal bar on your smaller, faster chart and the rules are met on your larger chart, you can create your window of opportunity, that point where the tail is most likely to form. So you're going to look from the top of your favorable large triggers to the bottom of your favorable large triggers. And David, this is where your areas have to be, inside of these triggers. Does that make sense? So far, so good. Everything says go up. Reversal bar says let's fight it. From the top of the triggers to the bottom of the triggers, but David, we can refine it even more. From your highest point of support, which happens to be that mid band, to the lowest point of support, which happens to be those yellow 1-to-1s. David, this box is where the market is most likely to continue. This box is where that tail is most likely to form. Do you notice how I'm not looking for the tail on the large chart? What I've done is I've created a window of opportunity on the small chart. Your job, David, is to take a limit order, to right click on the chart and put an order for entry a couple ticks above that midband. And this becomes your entry point for the highest probability trend trade that you can take. Because you had odds favorable momentum, you had no termination conditions, you waited for the reversal bar, you identified where the market is likely to continue, and you're literally waiting for the market to come down to you. Freddie, Charles O, guys, give me a Y in the room. We're going through the entry process, bar by bar right now. It takes a little practice. And here it comes. And I'm nervous because what if it doesn't get to me? And here it comes again and I'm scared. What if it doesn't make it to my order? What if it goes without me? Oh my gosh, guys, my palms are sweating just talking about it. Maybe I should jump in all the way up here. What do you guys think? Should I just say, oh my gosh, this is terrifying and jump in the market and hope for the best? What do you think? Or do I trust? Wrong answer. Amen, Gene. Guys, this methodology is built on decades of study. Nexgen's been around for over 25 years. Here it comes. Uh-oh. It went without me. Man, that's no good. Whoop, no wait. They're coming back. Guys, this small chart is a small chart. It's fluctuations. True story. All of this, bump, 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 bump. My large chart hasn't changed a thing. My large chart is still odds favorable and clear path. These are fluctuations on a smaller, faster refinement chart. And a lot of you are getting in at the top of this bar because you think it's going without you. Those of you that have studied it are waiting for the pullback to the midband. Notice how the midband's coming up? It's okay to move your order up just a little bit, right? Don't trip over pennies to save dollars. Be willing to spend a couple ticks. And the market comes down, and you're now in a trade at 87.33. Give me a Y. That's the whole process. That's the one, guys. You didn't see the tail, right? So D-Rock, I watch the midband. As it comes up, I'll adjust my entry to make sure that I'm still 2 ticks above it. So if this is my best of the best entry, where does my stop go? Where shouldn't the market go? It shouldn't go all the way down here, right? Because if it does, I'm way out of my window. There's my window. And I don't want this trade anymore. So guys, there's my protective stop. It's about 12 ticks. So far, so good, everybody. The large chart led the way. It gave us the advantage of momentum. It gave us the advantage of a clear path. We waited for a reversal bar, and we didn't get fooled on these little fluctuations. We entered a tick or two above resist or support inside of favorable large triggers. When we entered the trade, our stop went where the market shouldn't. And it just went against me a tick, guys. And I see a red number, and I'm fearful. Oh my gosh, what if I lose? What if I lose this pretend money? What if I lose my pretend mansion and my pretend Ferrari? What if I lose this simulated trade and my pretend girlfriend runs away with the pretend milkman, right? Who cares, guys? Learn the entry because great entries create manageable trades. There's your reversal bar off the perfect entry. You guys want to see one of my favorite things about Nexgen? There's my new stop, 2 ticks below the reversal bar. I'm in at 33. I've got $40 worth of risk on this trade. So where does the tail happen, David? Let's see if that box shows up right at the base of that tail. This is why we don't trade tails. We trade pullbacks to support on smaller, faster charts. And what did it do? Guys, this is what we call bingo. It went straight to Fibonacci resistance. Guys, that's your best of the best. That's your highest probability. That's the trade that sets the tone. That's the trade that makes you a chart reader. That's the trade that gives you a statistical advantage. The trade that typically wins 70 to 80% of the time when it comes from a termination condition. The trade that revolves around advantages. This is your first 20 days. Freddie, Charles O, Chef, everybody, D, I don't care who you are, David, work on recognizing those entries. And then here's the second part. How do we use those tails? Let's scroll back. We'll see if this one fit it. Small's below the large, everything's below the areas. There's one of those tails. What did it look like? So David, this is how I study tails. If I circle the tail and I scroll back on my smaller, faster chart, do, 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 do. It does pull back to resistance inside of favorable large triggers. This one overruns. This one might have gotten you. I'm not going to lie. You might have taken a loser here. But do you see how the tail lines up with the areas inside? And if I scroll back again, here's a lesson for you. The smalls aren't through. It's a termination. But I want you to see from an entry standpoint. If you got antsy, notice how there's no areas inside of favorable large triggers. It doesn't fit the rules. And then I scroll back again. All I'm doing is looking for opportunities. There's a tail. And you guys did this one with me. That's perfect. So your job here, as you're developing recognition, guys, is take this picture, right? Annotate it the exact same way that we annotated it and get it into your spreadsheet because that's your best of the best trade. And then scroll back and let's look for the next one, right? Where's the next advantage? They made us wait a little bit, didn't they? Let's take a look at this one, 4:09 a.m. The smalls are through the area, but the large are not. The area has the potential to break. It is not a clear path. But let's see with all that momentum, where did that tail form? Are you guys following me? Holy smokes, it pulled right back to support right there at those triggers. Look at how the triggers are split, and look at how it goes to the lower trigger. This is why favorable large triggers creates a smaller window of opportunity. That one worked. You might not have taken it because of the divergences, but you can literally scroll back and do this for 10 days, guys. Circle tails. See if your rules were met. Smalls are through, large are not. You guys see what's happening? Odds favorable. Smalls are through, large are not. We didn't reach the divergence low yet. Well, now we did. Smalls are through, large are not. If I get a reversal bar from the lowest point of my triggers to the highest point of my triggers, from the highest point of resistance to the lowest point of resistance, the small triggers have broken through the divergence low line. Do you see it, David? This is an area that has the potential to break because of the momentum and because the small triggers are through. But the path isn't broken. 86.44 isn't broken. 86.36 isn't broken, but they have the potential to break because of the momentum. I still haven't gotten a reversal bar, which is great because the further it pushes past, the better it is. But this is not a high probability trend trade. We're looking at two areas that haven't broken. Does that make sense, everybody? It can't be the advantage of a clear path because the small and the large are not on the other side. It is odds favorable momentum. What gives us odds favorable momentum, David? Strong triggers. Small's outside of the large are wide. So once I have odds favorable momentum, let's do a still frame real quick and take a look at it. David, do you see how this area of support is going to be the first area that we talk about? Both small and large get below this area of support. This area is broken. Does that make sense? Both small and the large get below. Now the area is broken. You can see that support begins to act as resistance. Does that make sense? Awesome. So here, 86.45, there's my small triggers, but here's my large triggers. Do you see how they both have not gotten to the other side of this blue line? So here I have potential to break with odds favorable momentum, but not a clear path. Because the smalls have broken and the large have not, the area is not broken, it's not a clear path. And then David, you actually have the same thing here, which means that if you take a trade, you are hoping that both of these areas break with the momentum. Does that make sense? And since they're not broken and it's not a clear path, I can't put this under the guise of high probability trend trade. This turns into what we call a medium probability trend trade, where an issue exists, and that issue is the clear path. Which means that if I get a pullback, I don't want to see divergence because that loss of momentum is problematic when I don't have a clear path. Does that make sense? 36 isn't broken. 45 isn't broken. This loss of momentum says that it may push higher. These areas may not break. It's not a high probability scenario anymore because rule number 2 isn't met. And look what's happening. So the idea is to begin with entries, right? Well, actually, not even with entries. Recognizing trend is the first thing that you're going to do. Freddie and Charles, recognizing trend is the first thing that you're going to do. And simply making the choice, I will trade with the trend. I won't fight it. And then once you can understand the trend, which is easy, it took you guys a matter of seconds, you're going to look for momentum. You're going to look for those strong trigger lines. You're going to insist, because your investments are worth it, on odds favorable momentum. This is the first pieces, guys. We're just doing it systematically. And then you're going to spend some time studying termination conditions. And you'll recognize, oh, Debbie, have a great day. Have an awesome day. Then you're going to start working on your termination recognition, right? And you're going to mess it up a few times, and you're going to trade into terminations, and you're going to make mistakes about the 50-50 look where they have the potential to break. So you may spend 3, 4, 5 days. Guys, you'll get to the right side of it, and you'll understand it. Um, you'll understand it a lot more the more pictures you take. So David and Freddie and Charles O, go back and do nothing more than a seek and find. Looking for termination conditions where price reached and the triggers didn't break. Start taking those pictures. Start committing that look to memory. And what you're going to find is it becomes easy, right? Repetition creates recognition. It always has, and it always does. Safia, take care. And then once you get that recognition from a chart that isn't moving, right? Going back historically and finding these, start recognizing them in the moment. And then once you have odds favorable and you have a clear path, then you'll start working on your entries, guys. And I always compare learning to day trade like eating an elephant. If you say, I'm going to eat an elephant, it's overwhelming. And if it's overwhelming, you're going to scramble your brain, right? You're going to look for too much. You're not going to keep it focused. But if you say, I'm going to eat this elephant one bite at a time, if you allow it to be one bite, each bite gets you to the entry. And then the entry is really the first piece of the puzzle, getting into the market at the right spot. So don't be in a hurry. Recognize that you're new. Give yourself a little bit of grace, right? We're going to learn the individuals so that we can focus on the whole. And it all starts with your entry. So I'm going to give you the trend trade checklist, guys. Print this out and put it on your desktop. This is how you're going to police yourself. Every time I take a trade, the rules for the trade must be met. That's your only option. And this is the hardest thing that you'll ever do. Either your rules are met or your rules are not. And those are your only two scenarios, guys. And if your rules are met, you're taking the trade. And if they're not, you're sitting on your hands. It falls into that 90%. I've never had anybody use this checklist for entry and do worse than 70% ever in the history of the checklist. So I give you this to print out to police yourself so you know exactly what to write on the chart because you're going to write these rules on your chart with an arrow to it actually happening. And then just to reinforce those great rules, here's the high probability trend trade checklist. And I've stolen pictures. Is the market coming from a good top or bottom? So David, Freddie, Charles. David, have you watched this video? I know that we talked about it more than once. Have you watched the video on tops and bottoms? Yeah. Watch it a couple times. And what you'll find is it clicks. The first one, you're like, what? The second time, you're like, oh. And the third time, you're like, haha, I got it. Watch the video again. Remember that if none of your triggers break, sit on your hands. And then there's that odds favorable momentum, rule number one. And then there's the reminder of what it looks like when it's not met. Here's the termination conditions, the scenarios that you're going to be faced with every day, deciding whether or not you have a clear path. And then there's that picture for the window of opportunity, guys. And all of these are on this document. This should be, hey, Paul, you should have this on your computer and look at it every day, right? Look at it every day. This is what I'm looking for. Let's get in there and let's do it. And then, guys, let's stay focused. Remember simplicity. I'm going to give you what's called the KISS plan. Thank you, Bobby T, for that final S, sunshine. Keep it simple, sunshine. This is a plan. David, it is so uncomfortable. Thank you for saying that. Show of hands, if you guys don't mind participating, who absolutely kicked ass in their chosen profession? Who's used to being the person with the answers? Who's used to having people come to them and say, hey, David, what am I supposed to do in this situation? Hey, Chef, how do I make this happen? Hey, Freddie, there's a problem down at the site. Can you help me fix it because you have the experience? Is it just me? Guys, I was the guy that trained managers in my job. I was the general manager. I was the guy that had all the answers. That was my job. I had a decade of experience to get to that point. And it's so uncomfortable resuming the idea of being a student when you're used to being the teacher. It really is. So, David, embrace that. Give yourself permission to be brand new. Give yourself permission to make mistakes. It's okay, man. Because if I come to you about horses, you're the expert and I'm the student. And there's probably 1,000 things to know that you take for granted that would sound like a different language to me, right? So what we're doing is we're creating the foundation so that one day we can be the experts here again, so that we can do it. And that's why we keep it so systematic and simple. That's why we only focus on 3 rules, and that's why we only focus on 2 charts. Because I'm not going to lie, it becomes overwhelming if you don't. So here's your plan for simplicity. Um, it's a stepping stone, guys. It's designed to optimize your chances of success with the high probability trend trade. It's designed to optimize your chances of success with that 50-50 that might break. And it's by no means designed to keep you from looking for more trades or creating a plan for yourself. But through simulation, study, class feedback, and continuous practice, you will create that plan. You will find a plan that suits your needs. And it's all going to be based on your ability to read the indicators. My job is to teach you to read the indicators. Your job is to commit to a set of rules, to commit to a plan. And until you have the reps to create your own, this is the one that gives you the best chance of success. This is a simple plan for consistency. And notice that it says in bold print, never fight the triggers, guys. Um, yep, crude oil inventories. Did you get caught? No? Good. I'm glad you didn't get caught. That's awesome. Guys, excuse me just 1 second. I'll be back in 2 seconds. All right, guys. Simple plan for consistency. Let it all revolve around kissing your wife goodbye. Never fight the large sharp direction of the triggers, guys. It doesn't do you any good. This simple little adherence will keep you out of a lot of bad trades. Um, and then focus on your entries. 20 days, right? 20 days focusing on getting in at the right spot. Who cares what happens? Focus on your entries because great entries create manageable trades. But once you have that great entry, once you're comfortable with it, once you've posted 50 times in this room, Mark, look at my entry. Am I doing it right? Help me refinement. And am I gauging these advantages? Well, now we have to do something with the trade, right? And it all begins with the great entry, that 20-day focus. I'm in the market at the area where it's likely to continue. I have the advantage of momentum. There's nothing in the way. This is my entry and this is my stop where the market shouldn't go. And guys, that stop's going to get hit. That stop is going to get hit and you're going to take a loser and you're going to question everything. Oh my gosh, did I make a mistake? What did I do wrong? What did I miss? Where did the world go sideways? And I'm going to tell you right now, if you get in the habit of annotating every chart with the rules, with arrows to the rules being met, what you're going to realize is that if that stop gets hit and your rules were met, it's a cost of doing business. It's just part of the 20, 30%. You don't get to pick when they happen. They always happen at the worst times. They always do. Nothing for me to do at this point, guys. It's either going to hit my stop or the market's going to bless me with a reversal bar. And if it gives me that reversal bar, I'm going to reduce my risk a couple ticks above it. It's mechanical and methodical. It's pragmatic. There's no emotion in this at all. It's 100% if then. If this happens, then I do that. I can't read charts well enough to make chart-based decisions on management. There's too much adrenaline and sweat and all that sort of stuff going on. And I'm either going to get hit for a smaller stop or it's going to go to my first target. And if it goes to my first target, hallelujah, there's $100 in my pocket. Ninja Trader just told me that my profit target was reached. And I'm going to move my stop to break even. I'm going to take that $100 and I'm going to go to break even. And here's the thing that's kind of a kick in the teeth for new users. You're going to get hit break even a lot while you learn to read your charts. You're going to get hit break even a lot from putting it in that position with no risk. This no risk isn't designed because that's not where the market is going to go. This no risk is designed because you just got paid and you're feeling confident and you're excited and you're happy and you have absolutely nothing to lose, which means you're confident, you're excited, you're happy, and it gives you the best shot of allowing the large chart to lead the way, to let all that momentum and that clear path take you to the second target. And your second target's $200 off in the distance, guys, which means if you're trading two contracts and you hit the second target with all those advantages, you just made $300. Here's the thing that you guys don't understand about $300. You guys that have to hit home runs, that have to hold for bigger moves, that have to watch trades go for you and then come back and wipe you out, guys. $300 a day is a $1,500 week, and that's a $6,000 month. And that's a $72,000 year on a high probability trend trade with the most pragmatic approach to management that you could ever take. That's a pretty good year. I don't know, Paul. I hate to give you that answer. I have no idea how to set up an auto trailing stop. Um, I maintain in control of my stops. I never leave it to a computer on my stops or my entries. I'm in control 100%. Um, because my stops go where the market shouldn't. Somebody in Traders Chat probably knows. And here's kind of a crazy thing. I don't know if you guys knew this. Um, you can go to this crazy thing called the internet. And then how to create a trailing stop order in NinjaTrader. Ta-da! And if it's on the internet, it's true. But that's what I do. NinjaTrader has every answer. Sometimes I don't have the answers. I hate when I don't have the answers, but sometimes I don't. Um, but guys, that's it. This is your first 30 days with Nexgen. That's what they say, David. This is your first 30 days, guys. The perfect entry and the pragmatic management. On the KISS plan, there's also taking those areas with the potential to break. That 50-50, one area not broken. And it relies on all those advantages again because the path isn't clear. And that'll help you as you go. But give it 30 days on the simple. I'm going to give you guys this plan. There's gentlemen in this room, there's people in this room that have followed it and done like 80%, which is pretty outstanding. And then as you grow with the software, you may build your own plan. So, Snorri, this is for you as you work on those momentum trades, and you probably already did it. But here's the fill in the blanks where you can define your entry, right? Taking pictures so that you can repeat it and creating your own plan based on your own study. And your results should produce a trade that's been proven to win more than it loses. So, guys, if you're adding a trade to your plan, and you can't prove that it wins more than it loses, why the hell is it in your plan, right? If you're taking a trade that only wins 30% of the time, why would you take that? Trading's about making money, and trading's looking for advantages. There's one of those 50-50 trades with no divergence, strong triggers. If you entered here, divergence on a 50-50 gave you a management opportunity, but you sure as heck took profits on the way up. I'm sure some of you will show me that one. NASDAQ is railing to the upside. The S&P is directly into a termination condition. Do you see how quickly that happened? Price reaches resistance. None of the trigger lines have broken through. I'm not going long into this area, guys. I refuse to go long into this area because there may be a reaction. There may be a reversal. There may be an untradeable bounce. There may be something that messes up my ability to make money. So, guys, that's our first hour. You made your money. Nice, Paul. And then our second hour will be this right here. Paul took the 50-50 with no divergence, made his money. When divergence printed, he said party's over. Nice job. Great trade, right, Paul? Beautiful trade. It was easy. It was pragmatic. It was rules-based. You knew exactly where to get paid, and you knew exactly when to get out because you have a solid set of rules that says, this is what I'm going to do. So, guys, I'm going to take a moment. I'm going to go take 5 minutes. I'm going to refill my water. If you have questions, post them in the room. The second half of the room is dedicated to your pictures and your questions. So when I get back, I'm going to scroll up to the top and I'm going to start looking at your pictures and I'm going to revolve everything that I see around these advantages. And if you've given me pictures with no rules, I'm just going to chart read it and move on. Um, so make sure that you're annotating. Freddie, I'd love to see a picture from you. Charles O, I'd love to see a picture from you. Doesn't even have to be a trade. Let me know that you can take pictures and get them in the room. And if you can't, let me know. We'll go over it. Guys, I'll be back in about 5 minutes. We'll get to the second half. All right, y'all, we're going to get into that second half of class. And the second half of class is me looking at your charts, talking about your questions, getting everything answered that you need answered. Um, I want to remind you that I scroll up to the top like this. So I have to get to the top of the classroom. We'll look at charts. Excuse me. So I'm going to go back and forth. I may miss a question for a second. If you ask a question and don't get your answer, remind me. If I miss your chart, please let me know. It's never intentional. It's not because I don't think it's important. Just sometimes I miss it. Starting with D-Rock. Bum, bum, bum. D-Rock says, we have a clear path and everything is accelerating. So he takes the entry at resistance inside of favorable large triggers. Virtually no risk. Complete rock star entry and lets the momentum take him to the fibs. D-Rock, beautiful. Absolutely beautiful. And then Chef putting on that display of how momentum can cover a mistake, right? When everything says up, the momentum is the strongest. He did have that termination condition, but look at the conditions on a smaller, faster chart. Odds favorable, no divergence, everything screaming, and he hits that entry like he is off in the weeds, right? With a high-powered scope. Boom, there it is. 4 or 5 ticks risk when it's all said and done. What an absolutely outstanding trade. Use of momentum in areas. And then, really, gosh, 2 times, guys. Go in either direction. How cool is it that you guys can make money going up or down? It doesn't matter what the market's doing. It just matters that you have those advantages. Great job, both of you. And you guys were in right about the same time. You're right about at the same spot in your learning curve. Doing great. And then Ace J, I know he had to go to work. That's a 4-letter word. But check it out. Odds favorable. Small's above the large are wide. 50-50, the small broke and the large didn't. Perfect recognition. One divergence, and he's inside of favorable large triggers. And the market reached the target. That's it, guys. That's the recipe. Over and over. Oh, this one makes me sad. Nope. He had the long, and then he exits. And then, guys, this is a tough one. This is a 50-50, right? The smalls are through, but the large are not. This is a great one for new users. I want you to see this. For me, this is a big deal. It doesn't have to be for you, but the smalls are above the divergence high, but the large are not. So that's an area that's not broken. Now, that's okay, Charles. You'll learn from everybody because the lessons are the same. So let's go to the next one, guys. There's a fib that the smalls have broken, but the large have not. So that's 2 areas that I need to have break. There's another fib, whoops, that the large haven't broken. And they're just getting over this one. So guys, I'm hoping with the small triggers returning back to the large triggers that 4 areas break. Does that make sense? One area I'm pretty cool with. That's a pretty stacked area. And then look what else I see on my small chart. There's divergence, right? There's small triggers inside of the large triggers. Do you guys see how problematic this can be? I'm giving away the clear path 4 times. I'm giving away momentum on a smaller chart. There are so many problems with this trade, and I'm not sure what happened. He said he took it yesterday, but if I had to guess, that one probably stopped cold and went the other way. And if you're following the KISS plan, that divergence keeps you out. Good stuff, though. Great pictures. Guys, I want to see not only your befores, I want to see your afters, too. I want to see what happened after. I want you to take the time to annotate what happened after. And then, Gene, I think we answered your question on this one. This is a bad top, absolutely, because it doesn't come from a termination that creates a full reversal. This lower divergence does not make it a good top. Not at all. It's a great sign, but not a good top. Manpreet, everything says up, and you went short. Are you in here, Manpreet? So guys, let me go back to the KISS trading plan real quick. Never fight the large chart direction or triggers, ever. And this one is odds favorable momentum. Everything's coming up. You're coming from a termination. Manpreet, let me know that you're in here. Let's talk about the gap theory. Because it looks as though it was not in effect. Not here. I'll talk about the gap theory anyway and hope that you get it. Guys, what Manpreet was trying to do was fight everything that set up. And he was hoping that the market would close back to the large triggers. It was a misunderstanding of a potential rule, and this is why we practice over and over, guys. So the gap theory, he says, was trying to trade the gap theory. The gap theory means that if price pulls away from the large triggers super fast and creates a huge gap, a full bar's distance, when it hits an area, it may close the gap back to the large triggers. So we use this to determine when the mid-band is behaving as a termination condition. Price reaches it. If the large triggers are a full bar away, price is likely to close the gap. You see it coming off of fibs. And this is what Manpreet was hoping for. He was hoping that price would close the gap back to those large triggers. The challenge, unfortunately, is that the large triggers weren't a full bar away. So really all this was looking for a short trade, making an opinion about a red line, when honestly, long trades probably would have been a better option there. So I hope you heard that. I hope that helps. Guys, fighting triggers and direction is really, oh, here we go. I have a book about it. And this is tongue-in-cheek, of course. How to Commit Financial Suicide by John Novak. Trading against strong triggers, trading in determination conditions, guys. Those are the two biggest money pullers from new users. And they're avoidable. And then there is odds favorable, 50-50, no divergence. You're looking for the bottom of the window rather than the top. It reached 42.75. And you were stopped out at 42.70. And you were in at 66, right at the mid-band. And again, I'm not sure if you're in here, but if you made it all the way to one-to-ones, all the way to resistance, all these things, and you gave back 5 points, hoping that areas break. Guys, these fibs are great targets, and we talk about where the market is likely to go. In the distance, 72 is a target. That's 6 points. That's outstanding. 73 was 7 points. That's even more outstanding, guys. Greed costs money all the time. For all of us, not just one of us. Alex G. Gap theory on the short, right? Did you just get that lesson, Alex? Are you in here? Price reaches a mid-band. Large triggers are more than a full bar away. Gap theory got you. And when it comes from a bad top, Alex, it's even less likely to work. But you're 50-50 on 1, 2, 3, 4 areas. And you have divergence and split triggers. Yeah, gap theory got you. And then here, remember when we said flat lifeless triggers don't ever have momentum? You're just kind of looking for the continuation here. You're hoping that this continues up. The small triggers are above, but the large triggers are flat. Notice how split and flat your triggers are? It's just a tough look. And you know what's interesting to me is that you have support in the midband above these triggers, but below these triggers. And these areas are outside of the triggers. Did you notice that you don't have one area inside of those lines? And there's a huge gap between the two? Yeah. This is the look. You took it at the right spot. If it's going to go, if it's going to finish that unfinished business, this is right where you are going short. Well, maybe not. Let's see, right where you got stopped out. This is where most people looking to finish the business are going long. And it fights everything. But when the smalls start to break above and we pull back, and then at that point, it just got wonky. That's one of those trades that almost fits the rules, but didn't really have momentum, and you definitely didn't have areas inside of favorable. You did have a clear path, though. Great picture. Great lessons. Gap theory again, right? And then when everything agrees, boom, boom. And then Alex, the lesson on this one, I know you're only looking for 30, but when my triggers look like this, I'm going to the fib. Great trade. Great recovery. Odds favorable momentum. Good bottom. Entered on resistance. Out for 5 points. Termination. Still into termination conditions 100%, but every trigger agrees. And it got you up to your target, Manpreet. It's a risky trade. Lot of resistance, all the triggers below. It's a risky trade. But that strong bottom gave it a fighting chance. Every trigger agreed to the upside. Worked out. Ron says dummy trade. What does that mean? Oh, that means that when everything says down and the path is clear, they'll just take a little money. Oh, you forgot to change it to sim? Oh no, you didn't change it from sim. So you missed your live money because you kept it on sim. Man, we've done that. That's usually on the one that would have been worth a couple thousand. I have taken the perfect trade or been in the perfect trade that everything says it's going live with sim contracts. Like I've been in this trade and said, oh, we're going to the fib. And right about here, I'm like, oh man, I'm on simulator. Rats. I think we've all done that. And all you can do is laugh, right? It doesn't do any good to get mad about it. Doesn't do any good to get mad about it. Emotions have no place in trading. They're never helpful. D-Rock. So D-Rock, you're catching that acceleration, right? But you're not quite there. You get in at resistance just below. You get your first target, and then it gets you for a couple ticks. I like it. If it's going to go, it's a good one. It did. It just got caught in a range. Do you see it? Do you see how rule number 2? No triggers through. Mid-band holds on gap theory. No triggers through. This is the one, D-Rock, that if it goes huge, and if it loses fast. That was the one, though. Right there. I think great entries create manageable trader. Gene, I love disciplined trader. Um, Another one, emotion-free trading is outstanding. There's the PDF file for you guys that want it. I need to read it again. Should read that once a week. Just remind yourself. D-Rocket's a good shot, great management. And this proves, guys, you can make money even not on the perfect trades with the perfect entries and a little bit of management. Being and doing. They are. Let's see what we have here. Resistance likely to hold, right? Termination below, termination here, but with everything saying down, it's likely to hold. You took a very patient pullback to small triggers. You said, I don't know how far it's going to bounce, so I'll let my small triggers roll. You get it on the pullback, and you get paid on the way down. Was this Gene? That's a solid trade. I love the patience on this one. That was Gene, right? Beautiful continuation entry. Guys, let me show you what Gene did. They did, right there. So let me show you how I see this one, and maybe you don't realize that you did it. So I'm looking for the long trade, right? And then problems happened. You were probably looking for the short trade and it kept pushing. Maybe there was a loser over here where you tried to go short and it didn't work out. Possibly. For a lot of people that happens. Everything still says down, right? Everything still says we're going to the downside. Your indicators are giving you that information. And sometimes the market pushes beyond the best entry. Sometimes the market overruns. Sometimes the market doesn't play nice. When it does that, in those small triggers, it's a beautiful entry. It's a great opportunity. And I think that you nailed it. I think that you nailed it here by letting these roll. What you did is you kind of confirmed that push up was over. So nothing but praise on that one. Solid. Your indicators said they were going down. You waited for really the most conservative entry on it. So I like it. Then everything down. You missed that one. And you take this one with the weaker triggers, and it works out nice. Big gap to the small triggers. Nice usage of that rule, Gene. Little NASDAQ stuff, huh? I'm not sure how many pictures are in this one. I think it's 3. Odds favorable. Everything says up. It's NASDAQ again. Those small triggers coming down against, and they push all the way down. And then over here, momentum trade at the blue fib. Trading into the fib rather than above the fib. I find clearing that path helps a little bit. And there's that 50-50, 3 divergences. And you went short, it looks like, directly into a fib against all of the momentum in the direction. I'm telling you guys, I see this a lot. That's an opinion trade, right? And then look at what support does. And this was right before news, too. The markers are still goofy. There's a surefire way. Yeah, the large triggers are below the fib, Gene. And see, this is the justification part, right? Just for grins, will you identify the momentum on the large trend, on the large chart for me? It's crazy strong up, isn't it? And it's coming from a midband that held from a bad top. Everything says up. Yeah. So everything says up, your large triggers are up, and you're on the wrong side of them. You're trading directly into support with the small triggers above it. 3 divergences gave you the push down to go retest the area. And then this market, once news hit, rocketed like a skyrocket to the upside. It did exactly what the large chart said that it was going to do. These are the trades I firmly believe. If you just weed them out, your P&L grows exponentially. That was replay from this morning. You were trading replay? Right on. I like it. Get those reps in, right? And then Miss Debbie, she's already left, but let's see what she did. Miss Debbie says, when everything is down with momentum, I take a short and go to the fib. Most of your picks are replay? Awesome. I love it. Get more reps, more experience, more recognition. Guys, the only thing I really need to point out about Miss Debbie's chart is that every trade that she posts in this room looks exactly the same. Every trade that she posts revolves around momentum and entries at the area. And she sure does have a lot of success. Then Gene, there's that small triggers up, large triggers up, a little split, and it goes to the bottom of the split. And you were waiting for the roll, and it just got you. It was a good shot, I think. It goes to the bottom of the window, stops right here when it starts coming up. I think this was your trade, Gene, if this makes sense. Because at this point, the small triggers are still down, and on NASDAQ, that's a horrible sign. Really, on this one, an entry for me would have been on the correct side of the triggers, and I would have lost this one as well. My stop would have been behind here. It's a good look that didn't work. And those happen sometimes, unfortunately. And then Sydney. Chart read, waiting for the clear path. I love it. Chart read. I love that you put that too. Sydney's like, I don't have any rules met. What do you say we just read a chart? Get some good stuff going. Clear path. Not a 50. Oh, we're going south. Okay. 50-50. Pull back to the mid band. I'm not sure where you pulled back to. Gene, help me with the entry on this one. I like the 50-50, right? This is showing me a fib to the tick. Fib to the tick. You went short here. Or you went long here. That was your long. And then you got stopped out of the long. Did you go up or down in this trade? This says you went long. Oh, so you went... this is a hard one to read. Because I can't see where your entry is because you have those wonky... You went long here at the box when the small triggers rolled? Right there? Okay. I see what you did. But was it over here or was it back here when everything said down? Because these are still up, so it had to be somewhere about right here when the triggers rolled and pulled back. So right about there maybe, 1028-ish? Yeah. I see what you did, and I like that you let the triggers roll up, but continuation style trades, Gene, especially on NASDAQ, when these small triggers are coming against you, you're almost never going to win them. Almost never going to win them. I say almost because there's times when it's going to let you get lucky. But when these are against you like this, it's the same concept over here. The odds of you winning that trade go down exponentially. You're at the tail end, so your entry would have been right around 1027. They've turned. I see what you're doing. See how you're on the wrong side of it's actually not, David. See how you're on the wrong side of the large? I'm trying to work through things, Gene. For a continuation style, you're doing it at the right spot. I'm just trying to help identify things that might keep you a little safer. Being on the wrong side of the large triggers. Yeah, Gene, I think it was right idea didn't work. It really was. It was just right idea that didn't work. And now I'm nitpicking because I've been run over so much on the NASDAQ, I begin to recognize things. I love my small triggers being on the correct side of the large for continuation style. I find that I have a higher win percentage like that. And David, it's not 50-50. This is very much a clear path. Right here would be 50-50, but he didn't take a trade here. He's just got wonky indicator or wonky tabs. Here, smalls are through, large or not, but he didn't go short. That wasn't a short trade for him. He's talking about all the way over here. Gene, I'm going to send John a quick question um, about the markers in the wrong spot, and I'm sure he has an answer. You already talked to him and Jason? Oh, shoot. Well, I was hoping to get you an answer. All right. What's next? Da, da, da. I think we just saw this one. Yep, okay, that's the one we just saw, which means that we're going at Paul's 50-50. So, David, here's that 50-50 look. Smalls above, large below. There's your line with the potential to break. Does that make sense, David? Jason said talk to Ninja. Right on. Allie, are your rules met? And what's this we? I have never touched your account or your mouse, right? So, Allie, can your rules be met with a red background or a green background against the overall trend? That's the biggest question. Can you have odds favorable momentum and a clear path in a market that pushes back a little bit so that it changes the trend? Let's see if we can find one. To the chart, I'm sorry, I didn't realize that you were referring to the chart. This one? For a continuation style, Ali, yes. For a continuation style, you can, but honestly, that refers back to that if the small triggers are below the large triggers, that's what gives the red background. And I was telling Gene that I prefer, personally in my own trading, he can do whatever he wants. I prefer those small triggers to be breaking above. So for continuation style trades, it can be red, but I think the advantage comes when all charts agree, when there's that same look on all charts. It creates a higher chance of success when all of your charts agree. Does that make sense? Good question. You guys ask the best questions. You really do. And y'all are why this class is as good as I think it is. It's your input, it's your questions. Man, what's up, momentum style? Strong trending market, nothing in the way. Break the area, pull back to the area, and go. Alan, beautiful. Guys, this is not a high probability trend trade. This is Alan saying, I have a clear path in a strong trending market. Let me use this silly little fib on my 5-1. Let price break it with all that momentum. Pull back to it. Textbook entry. Beautiful, Alan. Way to take advantage of that market. And look, he says, hey, look, there's a problem. I'm going to get paid. Nice job, man. Nice job. I say it all the time, guys. It's such a kick for me to watch you guys get better. It's such a kick for me to see you guys take these lessons and turn it into it. Less than a minute? Yeah. I didn't even look at those timestamps, Gene. That thing was flying. That was 12 seconds. Or no. Yeah. That was like a 10-second trade, Alan. That doesn't suck. Does not at all. All right. And then Freddy Krueger. I love your name, by the way. I hope I'm saying it right because that's how I see it in my mind. Let me see if we can get that to open. Here we go. First post. What does this show me? Shows you two different things. Let's go through everything that I see on this one. I love this picture. What a great picture to get better at chart reading. And can we start on the left and just work our way right, Freddie? So let's start here. The market's trending up, which I love, right? That's a good one. Not Allen's trade, John. We're wondering about Gene's a little higher up. We were curious. Gene gets some kooky, crazy timestamps way off. All right. Freddie, are you with me in here? You are, right? Cool. Uptrends, and I'm just going to use the same arrow. Price reaches resistance, no triggers break. It's a termination. Small triggers break, large triggers don't. That's your 50-50 look, right? With odds favorable momentum, it has the potential to break. Smalls and large break. And then we get into just some wonkiness. Right here, the smalls start to turn against, but the large are up, and we haven't broken this area yet. It's an area that has the potential to break, but it hasn't broken. And honestly, it ends up holding to the downside because we're not coming from a termination condition over here. What we're looking at is just a pivot with a loss of momentum. And you'll see this a lot in the market. When it doesn't come from a termination, it loves to get up to that mid band, and then things kind of reverse. And then here we get odds favorable, right? Small trend lines are under the big lines, odds favorable. They made it through the area. The smalls made it, the large didn't. So again, we're looking at areas with the potential to break but haven't yet broken. So right here, a couple different things stick out. This area has the potential to break because the smalls and the large have dissected it, right? 50% above, 50% below, all that momentum. It has the potential to break. And momentum breaks areas, Freddie. That's kind of the lesson on this one. And then on this low, the smalls are starting to break, and I remember that it did break. So we were looking at the idea that the trigger lines very much dictate whether or not an area is broken. And I think if we go back to that one, that was crude oil. This was it right here, right around 1020. And see, with that momentum and the potential to break, it pushes and then it dances a little bit right there at resistance inside, and the market comes down again. And then it pushes right back to resistance a second time, and then it finishes the move. This little dancing on your smaller, faster chart happens around fibs. If I circle these two bars on the large chart, look at how many bars it is on the smaller, faster chart. Look at all of that indecision on the smaller chart. This is why the large chart leads the way. There's a lot of great lessons in your picture there. It has the potential to break because of odds favorable momentum, but because it is at key areas, we see that little dance happen. But do you notice how, let's do this. Do you notice how the direction is still down, the momentum is still down, the area is still down? Everything on this chart agrees with down. And then Ollie, that little cross over the large triggers made it green, didn't it? But everything still said down. And if you took this trade, turned out to be a pretty good one. And that's one of those areas with the potential to break. I'm glad I was able to find an example of that, Ollie, because it does happen every now and then. And then D-Rock, odds favorable, clear path, everything says up, amazing entrance. First target hit, right? One divergence doesn't scare you, two divergence don't scare you, three divergence, you said, I'm going to get the hell out of this trade because it may push lower. And sure enough, it did. D-Rock putting on a clinic for small chart terminations. Nice job, man. And guys, I tell you, this becomes difficult to recognize in the moment, but look at how you can see the change. I love this picture. When everything says up on the large chart, no divergence makes it easy. One divergence, still easy. Two divergences, see how those triggers are weak? Makes it a little more difficult. By the time that third divergence prints, do you see how we go from favorable large triggers to split large triggers? We go from smalls odds favorable to smalls to the wrong side. I mean, this is an awesome chart read, letting the change on the small chart keep you from taking a loser when the large chart says it's going up. That's solid, man. And then Chef, not gap theory. Great question. Not gap theories. Let's talk about why. No, I love it. I'm going to get you your answer. So, Chef, a couple things here. It is 50-50 on this area, right? Smalls are through, large are not. I love it. So, in order for the gap theory to be in place, do you see your reversal bar marker, that white line right there? In order for the gap theory to be in place, I want to see my triggers above that reversal bar marker. That lets me know that there's room for a full bar before I collide with the triggers. Does that make sense? Because this is the point where this bar would have become a reversal bar, and look how deep into the triggers it is. And that's kind of what the gap theory does for us, is it identifies using the reversal bar marker that there's room for a full bar to print. And if we go back to, we'll see if crude, yeah, there's a great example of it that we saw earlier. Stretch it out so we can see it. Price accelerates away from those large triggers, smacks the midband. See how there was room for a reversal bar? It lets you know, don't go short. Don't take that short trade. And then price reaches resistance. There is room for a full reversal bar. Don't take that long trade. Price reaches the mid-band. Large triggers don't blink. Don't you look for a long trade. Pretty cool, right? It's a safeguard. New users love to try to take it as a trade. Here, price is accelerated. The large triggers are all the way down. This one is like right teetering on the edge. But three divergences may push it lower. Great picture. Great question, Chef. Telling you, if you get in the habit of never letting a question go unanswered, never let a question go unanswered, it's going to change your world. All right, Gary. 50-50. Oh, you got in before the 50-50. I'm trying to figure out where you got in over here. Everything says up from a good bottom. It hits and you don't get filled, but you're like, with all this momentum, that's a great opportunity. Gary, nice trade. Recognizing that it just didn't hit your area, but there's so many advantages in place, you're getting paid. I like the way you handled that one. And after the reversal bar, your management's already defined. So well done, Gary. And then Gene taken, was that Gene? No, this is Dwight. Dwight, termination, full reversal, odds favorable, path cleared. Momentum in, momentum out. And then which one did you miss? The long trade? You're the one with the messed up markers. That's your thing now, Gene. You are messed up markers guy. Great job on the momentum, Dwight. And then choosing not to take it, that's okay. Well, there's nothing to do where the arrow is there? There's a potential short right here. There's a 50-50 short. But then one, two, three, four divergences says don't go short anymore. But everything's down and below the fibs. It says don't go long yet. Your first opportunity that kind of validated this is overrun, Dwight, is the four divergences. Everything rolls, and maybe you find one momentum trade right here. Does that make sense? Nothing to do down here. Multiple divergences say no more shorts, but it's still too soon for longs. Your ability to do absolutely nothing in this transition phase is outstanding. And then David, termination, full reversal, everything says up. You're looking for a pullback to support inside of favorable large triggers. How did it work out, David? Is there an after picture? It didn't. It didn't, Manpreet. There was nothing to do. It was just a transition phase. Nothing to do here at all. There's no opportunity. Everything says down below fibs. Four divergences say don't go short. Everything below fibs say don't go long. Things didn't start turning up until over here when it starts coming up and above. David, how did this one turn out? Can I tell you something though, David? Are you in here? Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable has a 50-50, and you're waiting for a pullback to support inside of favorable large triggers. How'd you feel about it? David, congratulations. You read your charts. Nicely done. Not a clear path because it is 50-50. What did it end up doing? What time was that? 8:11? David, was there an after picture? Strong silent type. That's all right. I have charts. Let's go see. Um, I believe we have different time zones. Unless that was the pullback there, but that was into a termination. That does not look the same. David, was this it right here? 11:15? You guys know I have to figure this out now, right? Or I'm gonna freak out. That is pivot stop out. Looking for the entry. So, all right. David's not talking. Guys, give me a Y in the room if you see that this went from the highest point of support inside of favorable large triggers. This is our lesson on rule number 3. Termination creates full reversal. Full reversal gives odds favorable. Because of the momentum, the entry comes at the highest point. The stop goes below. Can you guys still hear me? Do you see it? His entry is at the bottom of the window, or actually the middle of the window, and it goes from the top of the window. And then there's just a whole bunch of indecision that happens. But that's a pretty easy 100 points break even. It's a great read, David. I hope you can hear that because I know that it's hard to be new. And you read it perfectly. Little tweak on the entry helps out. And then chef, if synthetics are inside favorable large triggers, rules are met. Do these serve as a place for entrance? Overthinking it, right, chef? So what are favorable large triggers? They overlap. That's okay. Let's break it down. Always. I love it. Favorable large triggers means that they're one on top of the other, that they are overlapping 100%, right, chef? So when I say that entries come from areas inside of favorable large triggers, it's a subtle reminder for brand new users to remember that the tighter they are on one another, the least amount of risk. So these are your favorable large triggers. That's your area inside. Absolutely, that works. Up here, Ollie? Oh, the one before chefs. And then chef, here's another example. The large and the synthetics are kind of wonky, right? They're not one on top of the other perfect, and you have a window of opportunity that's 12 ticks wide. The tighter they are on top of each other, the smaller the window, but it doesn't mean that there's not opportunities. It just means that your risk becomes a little bit higher. So the fact that you only have one line inside of those triggers is outstanding. And then I have a split trigger picture that I'll share with you guys. And then Ollie, I'll make sure that I get your answer after this. On split triggers, when they're one on top of the other, this was somebody's chart that I actually stole to make that slide from. Look at how concise and how clear it is. And here at the time of the reversal bar, chef, you will, man. It's a process. See how at the time of the reversal bar you have a mid band here? And you also have one-to-ones all the way down here, right? And you're like, and that trigger is split. And it may pull back to the area inside of the large, but it might also pull back to the synthetics. And that's why when they're one on top of the other, it helps a lot. It doesn't mean that you can't take a trade, but it means that your risk is definitely going to be larger because it may close that gap. But your look was a pretty good look, man. There was only one line inside, and that becomes a beautiful opportunity. And then Ollie, the small triggers cross the fib support on the large chart. Does that make sense, Chef? Awesome. All right, so Ollie, the smalls crossed and the large didn't, right? Dun, dun, dun. I have pictures for everything. One day you guys will too. So Ollie, this is that 50-50 look. Smalls are through, large are not. There's almost the exact same look, right? So this means that with this momentum, 6980 has the potential to break. So with this momentum, 8608, it has the potential to break. Does that make sense, Ollie? Since the large are still below, it's not broken. But with this much momentum in a termination condition, it definitely has the potential. The split triggers, Manpreet, which picks? I just want to make sure that you get the right ones. Here. Dun, dun, dun. I share it every day, about 4 times a day. And there it is again. There you go, bud. There's everything for you. Yeah, those are all on the client trades picks. You're welcome. Take a look at all of them. And if you have questions about any of them, let me know. So, Ollie, it's one of those 50-50 scenarios. Does that make sense? It has the potential to break because of the momentum, but it's not broken yet because the large triggers didn't get through, which means that it can create problems. And if you go back to looking at it, it had the potential to break, and then 3 divergences really ruined the party. Good stuff. And the separate question, if synthetics are inside a favorable large, the rules are met. So the way we're defining chef, and I think we did it, is favorable large triggers is when they're so close that they behave as one. And that reduces risk. And then divergence on a 50-50. And John, so what happened is one divergence pushed it to the top of the window with all that momentum from the pivot stop out. And then two divergences said, all right, you probably shouldn't be doing this, but I'm going to give you one more shot. Three divergences said, I'm going to take you out of your trade. Four divergences said, you know what? We're going down. That area is not going to break. So when we talk about these 50-50 trades, if you go through the KISS trading plan, those areas where it hasn't broken yet, and guys, I like one area not broken very much. Hey, Chef, and have a great one, man. I'll see you tomorrow morning. I've got some stuff that's real important to me um, when I'm looking for. Whoops, that's not what I wanted to do. When I'm looking for a 50-50 trade, one area not broken. For me personally, I want to make sure that I have odds favorable momentum on the small chart. That's a big deal. I don't want to sacrifice that momentum if I'm not um, going to have a clear path. I also want to make sure, and this is really without question, I want odds favorable momentum, both charts, guys. I want to see both charts screaming, giving me the best chance of breaking that area. From the KISS plan, it says no divergence on the 5-1 because we're already giving up the clear path. Why on earth would we sacrifice momentum as well, right? And as you grow with the software, remember that this is a stepping stone. Through your simulation study, feedback, and practice, you're probably going to adjust this one. Coming from a good top or bottom increases the chance of success even more. And then if all this is a yes, I'm in at the area. I'm ready to go. I'm taking this trade with the potential to break. Here's that reminder that if divergence prints, no trade, right? And that's the best of the best, guys. That's your highest chance of success on those 50-50 style trades. So, Ollie, as you start working into those, this is a great way to think about it as you're going. And then the management, because it's not high probability, it has to be different, right? You're still using the window of opportunity. You're still using the reversal bars. And then notice that I put, and this is the third reference, guys, if divergence prints, exit the trade. You're giving up too many advantages. And then the profit targets are similar. It's been a total mess this morning. Sorry, Snorri. It was yesterday for a lot of people. I always ask, and I know that you probably did, you went through everything, right? You went through the cash, the tick. Um, Sometimes, and I think Chef did it yesterday. Oh, thank you for that, Snorri. PMA, man, positive mental attitude. It makes good things. You just hit your target. Chef, you're getting funded? Hell yeah. That's like 4 this week, guys. Chef, do me a favor before you go. How long have you been with Nexgen? 3 weeks, guys. 3 weeks. Simplicity. Chef, you are an amazing human being. Thank you for sharing that. Guys, 3 weeks focusing on the best of the best. You don't need anything else. Stay in your lanes and don't try too hard. Amen. Um, Snorri, I'm sorry for the challenges, but I love that you're remaining calm. Um, it's hard sometimes. It really is. True story. I have the letters PMA tattooed on my knee. One of my favorite phrases from old punk rock songs. Positive mental attitude, guys. Positive mental attitude. You're gonna find what you seek, right? Snorri, I know yesterday Chef deleted NinjaTrader, reloaded it, and it worked great. And I guess NinjaTrader's already fixed it for you. So now get back in and rock it out. Oh, I love hearing that you guys got funded. And in 3 weeks, that's the path. Guys, now I'm obligated to share with you. This is what Chef did. This is exactly what Chef did. He posted every trade in the class, every win, every loss, everything he did, he took feedback on. And he took it and ran with it and studied it and went through. And if you win and the rules are wrong, you may have a short-term victory, but a long-term failure, right? If you're breaking those rules and getting lucky, it rarely holds for the long term. How are you going to know the difference? You need feedback, guys. You need feedback, and I'm here to help. John Novak's here to help. Nexgen is here to help. I'm live 15 hours every week, live to talk about everything that you see. High probability, PFI. Chef knows that too many chefs spoil the broth. Kiss simple plan, guys. The people getting funded are getting funded through simplicity. The people reaching their goals are reaching their goals through simplicity. No offense, and I'm sorry if this stings a little bit. You guys that are trying to be the same traders you see with 20 years experience, getting your ass kicked every day because you feel entitled to win, you're not going to break that chain if you keep doing that. Learn to be good at something easy and then expand. Guys, you need feedback. You need to know what you did right or wrong, and then you need to accept that. If I say, hey, you traded into a termination condition, don't give me 10 reasons why it was okay for you to do it. Just go, oh, that termination condition probably kicked my ass, right? That's the best thing you can do. Um, so, Ollie, what you can probably do if you reinstalled everything this morning, because you have a file already, go to the resources page and run your indicators. Download the indicators. That should get you set. Just reinstalling NT8 shouldn't violate your file. So if you run the indicators, it should put all those workspaces, all those ATM strategies, all that stuff in there. And then Snorri, you already got one funded since you started here. The second one is just shy. And Snorri, how long have you been here? 3 weeks. So it can be done in under a month if you keep it simple, guys. It's amazing. Can I share with you? That's their plan. I love it. I love it. And I always tell people, why? Snorri, so here's the cool thing is you learn the rules, right? Chef, take care, man. Is you learned how to recognize advantages. And that's the first part is understanding. Just being able to identify momentum, a clear path in an entry area. Would you guys agree that when you can pick this out of your charts almost instantly, a lot more makes sense. When you understand momentum, you understand where the market's likely to go. You understand that it's likely to continue. When you understand termination conditions, you know that it jacks up your chances. And once you can pick the entry where it's most likely to continue, guys, there's a million ways to do it. But it starts with simplicity. It starts with that basic and then grow from there. And then Chef says most of his trades were high probability trend trades. His biggest fault was management, getting out earlier than expected, or probably would have gotten funded earlier. He played it extra safe and stuck to his plan. The plan is dynamic, and he made minor changes until he found what worked for him. Amen. So here's the wonderful thing, guys, is it can be done, right? It can be done. Freddie, it can be done. You're watching people do it in 3 weeks. Charles O, it can be done. But what you have to do is you have to get the repetition. You have to get those reps in so that you understand the looks, so that it becomes easy, so that it's not arduous or difficult. And that's what the class does, guys, every day. I'm so stoked right now. Good job. If you're not reaching your goals, you know who I'm talking to. I'm going to give you guys a challenge. If you're chasing everything and not finding anything, nobody's ever pulled this one out. Nobody has ever pulled this one off. 5 days. Well, that's not true. I'm not going to say never. 5 days on the KISS plan, guys. If you're not reaching your goals, 5 days following a simple plan. Give me 5 days. If you do it, my guess is it will change your fortune. Because I've never had anybody do it and not be successful. I've had people tell me that there aren't trades in the market and then go back to this plan and find a million trades. There were so many more opportunities than they thought because they weren't chasing everything. So guys, if you're not reaching your goals, give it a try. What's the worst that's going to happen? You're not going to reach your goals? You're already there. And then we did this fun one yesterday. My brother and mine's joke is the too many mind. And John, I'm glad you're in here. You weren't here for this yesterday. This was fun. When you're looking for a high probability trend trade, you're looking for 3 rules on 2 charts, and that's only 5 things to think about. When you open your workspace and you look at your charts, there's only 5 things that you have to do. You have to look at 2 charts and 3 rules. When you incorporate that 50-50 trade, it's 4 rules on 3 charts, right? So that's 7 things to think about, which means that between the 2 trades, from the second you glance, oh, awesome, Ron, have fun, man. Put them on a chili dog, put them on a hot dog. Now you're thinking about 12 things because not only do you have to go through the rules for the high probability trend trade as well as the medium probability 50-50 in your head, you have to discern where you're at. Are the rules met? Do I have an entry? And you're giving yourself 12 things to think about. If you're not good at the 5 things and these don't come instantly to you, 12 is going to be overwhelming. And then I see you guys, well, now I'm going to add a momentum trade, and that's going to be another 2 charts at least and 4 rules. And now I have 18 things to think about as a brand new user. And what happens on those 18 things when you're looking at 3 markets? Anybody good at math here? Is that 54? 54 different scenarios, right? You'll find a trade every 90 seconds. It won't be the right one. And then you add in an HVA trade, which is 3 charts and 4 rules. And now there's 25. And by 3 markets, that's 75 things to think about every time. And guys, so you keep going through this thing, right? And you keep giving yourself more to look for. You keep giving yourself more chances to make mistakes, more items where you are, D-Rock, that's okay. There's no problem with that. But this was the too many minds, and since John wasn't here for it yesterday, I wanted to run through it today because we talk about this every day, and we go back to that last samurai talk, and the more you're giving yourself to think about, the less likely you are to find the best trades, right? Because you're going to let this chart talk you into that trade. And what I've seen before is I've seen people start to put the 2 trades together. I'm looking for a high probability trend trade, but I'm using my checklist from the HVA trade, or vice versa. Or I'm looking for a 50-50 trade, but I'm using the checklist for the momentum trade. And that happens a lot. No trade, but an observation, Manpreet. Price touched the midband on the large chart. So, Manpreet, you weren't here for the lesson earlier where you tried to take the gap theory, right? Let me see if I can find your picture. Um, Give me 1 second because the lesson was huge for you, and I apologize that you missed it. I realize life gets in the way sometimes. But I'm glad that you're back, and I want to look at it. And I believe it was this one. So you went short on this one, anticipating a gap fill, right? That's okay. Meetings happen. But I'm glad that I remembered that you didn't answer so we could come back. You misinterpreted the gap theory here, Manpreet. The large triggers weren't a full bar away. And in order to have the gap theory, those large triggers have to remain a full bar away. Do you see the difference between the two? Room for a full reversal bar and not enough. So essentially what you did here is you fought momentum and you fought direction and you fought momentum and you fought direction and you were hoping that this red line pushes you back to the large triggers that weren't even a full bar away. It's just a misunderstanding of the lesson. And this is a great one to get run over on because this is really the clinical definition of financial suicide. Now on this one, when you hit that mid band, all these areas of support, and the large triggers don't follow, this is where we can anticipate that snapback. But let me show you one of the problems on this and why these trying to trade the gap theory is so problematic for people because you don't have enough information. Is this gap theory going to happen from here, from here, from here, or from here, or from here, right? There's really no way of knowing, right, Manpreet? It's likely to happen, but gosh, where's it going to come from? So here's kind of how you have to do this. It takes more than two charts to trade the gap. You have to, this was 1141 on the ES, right? So 1141 on the ES. Let me see something real quick. I think that I still have the chart built. That's an 8 range. Hold on. So I'm going to give you the lesson. Guys, I'm not encouraging you to take these trades. But in order to take this trade with some sort of potential, you need, you need a 21 chart, Manpreet. You need a 21 chart, with odds favorable momentum and a clear path. Because when you have odds favorable momentum and a clear path, on a 13.2, isn't the pullback to support your entry, right? So if your 21.3 has odds favorable momentum and a clear path, it's just a trend trade long on the 13.2, but you don't know where it's going to come from. So if we look at that same look, what did it look like on this chart? How do you decide where to get in? What about that close above the large triggers and the small triggers that's closest to the support? That higher divergence that prints, right? So there's a lot more to it than just trading the gap. The scenario has to be correct on the largest time frame. The entry has to be timed out on the smaller time frame. You have to discern which one of these lines is going to be the one, because if you went long here, you lost, right? And if you went long here, it came back on you. And if you went long here, it probably came back on you. Which is going to be the right one? So the gap theory is cool, but I think the gap theory is better used. Don't take the short. Not necessarily jump into the long. Eventually you'll get it. But that's kind of the lesson on that one. So great picture, and I'm glad that we could go back. Your first picture didn't have the gap theory in effect so much. And then Ron, dun dun dun, taking a snippet. Quick little $540, not a bad way to play. And then Manpreet, we just did the lesson on that one. And then John Novak throwing some wisdom. Everyone who does high probability trend trades with good tops or bottoms tends to win. Once people start winning, they push harder and they find the other money they wish they had. Some people are good at it. I myself suck at it. Just for clarity, momentum trades, etc. Some people suck at it. Oh, that's me. You will not know who you are until you try each of the setups. Guys, I can make 250 a day on high probabilities all day. It's when I deviate that I lose. And then prop firms do take the pressure off. If you lose 5 to 10 of your own money, it becomes difficult to pull the trigger. And then Gene, psychological. You can trade 2 to 3 contracts on 10 accounts, but doubt you could ever trade 20 or 30 on one, knowing your limitations, right? So pretty awesome, guys. Freddie, was it a little easier today than it was yesterday? That's always my goal, is that every day we take a step forward. Awesome. There's no doubt it works. I don't care who you are. You can challenge me all day long on this. It works. You just have to learn to use it. That's all it is, and that's what the classroom does. That's the magic of Next Gen. We teach you to understand when the advantages are there, and we teach you to understand when they're no longer there. And all you have to do is give yourself the experience through repetition and participation, and anybody can reach their goals. I firmly believe that. Anybody can get exactly where they want to be. Awesome. So if you play with it tonight, take some pictures. Please feel free to bring them to class tomorrow, Freddie. It doesn't have to happen in the live market for you to get feedback. And then if you need anything, my email always works. You can DM me in Discord. I get back to them as soon as I can. Don't be shy if you need help. We really are here to help. Even the CEO, the guy that wrote the software, jumps in here and likes to help out every now and then. He doesn't know it, but I may ask him to cover a day next week as I travel back to Texas. Um, Force him to put a lesson plan in. Because when he comes through here, man, it's great stuff. I'm never breaking up with you, John Novak. It's forever. We will be brothers forever. Pivot stop outs, a termination used for entry. Too advanced, John. Don't trade into one-to-ones with all the triggers below, even if there is a pivot stop out. You're hoping this area breaks. And now that I've scolded my brother, guys, have an awesome afternoon. I'll be back tomorrow morning at 9 a.m. And we're going to do it again. We're going to talk about rules. We're going to talk about advantages. You're going to develop a plan. Thank you so much for being here, guys. I really do become a better trader through talking to you about being a better trader. I'll see you tomorrow morning at 9 a.m. Trade well, everybody. And Freddie, we are just getting started, my friend.